Very good morning, everyone. How are you all? Super. Now, last class we started India 37. We have completed a definition part, measurement part. Okay. Then we also have done one special point about reimbursement. Have you tried some questions by your own? Have you read any questions? Okay. चलेगा ठीक है. So what you have done in the evening? Last evening? Last evening what you have done? You came from your office, then gone to bed. Morning came. नहीं नहीं. Always देखो just this is the initial class. Okay, it चलेगा. But once the chapters will be means once we enter into some good chapter, then you will find that your entire means whatever questions is left that will become accumulated. Okay, understood. So slowly you need to also start studying. Give some time. Start from half an hour or 20 minutes. I know after CA Inter you are not habituated to sit and study because of course the last exam you have written 6 months, 7 months, 1 year before. So now you are not in a habit to study. Sit and study. Right now you are coming in the classroom because you have paid fees. Otherwise you will not come here also because you have paid fees and this is the first class. Chalo maja aa raha hai. Chalo. Got this point. What I am saying that start from half an hour. Read questions. Read solution. If you are not, if you don't want to solve it by your own, then read question, read solution. Something will go in your mind now. And whenever you are reading question and solution both, so at least it is completed. At least the questions are completed. We want to complete each and every questions. Already from your point of view, I have divided all the questions in three categories. So you can start with the third category. At least a third category, not second category. I already said that one time practice required. You can start with the second category. You will find that whatever I have done in the class, whether you have understood or not. Suppose you are not able to get the answer or you are not able to understand the information given the question. Correct now. So you will be able to understand one point that even though we have understood concept but we are not able to answer it. Ultimate objective is what? To write in exam hall. Correct. So study for half an hour, then increase it. Okay. Chalo. And already I have said that after 10 days I will take one test. Should be committed for that also. Now after 10 days if I am taking one test, then you are required another 20 days to complete the first 10 days. Then what is the use of conducting test? There is no use now. As per my past experience, EA final student don't write any test. And then they will buy test series, they will put money on that and waste their time. Understood? Is before exam they will buy test series. They will not give importance to our test, but they will give money, buy test series. I don't know whether they will write or they will not write. But can you see if I am conducting test, that fees is also you have already paid for that. That is inclusive now, already inclusive. But I will say that is nothing but free of cost. So just respect the test also. So after 10 days, of course, I will take the test. Okay, so you should be prepared for that also. After 10 days, once I am uploading the test paper, at least you should be able to write all the questions. Got this point? Yes, sir. Chalo. Now the last day, the last point was reimbursement. Last point was reimbursement. So reimbursement, I hope you have understood that whenever there is an expenditure which is required to settle any obligation, so of course for that we will create provision. Provision will be recognized when all the three conditions are satisfied. So right now we are assuming that yes, provision is recognized. Now what about reimbursement? So if there is a reimbursement for such expenditure by any third party, so what India 37 says that if the reimbursement is virtually certain, then recognize a separate reimbursement asset in the balance sheet. But in SOPL, you can recognize the net expense. Net expense means reimbursement reduced from the amount of provision. Net amount will be charged to profit and loss account. In any case, the amount of reimbursement should not exceed the amount of provision. Very simple point. If it is not virtually certain, then you need to find out if the reimbursement is probable, then disclose the fact in the notes to account as a contingent asset. Otherwise, no treatment is required. No treatment is required. Yeah. So, correct? Got this point? Now the next point is what? Future operating loss. Future operating loss. Let me take one example. The example is what? Means now I will give you one case study. You need to only apply what? Whatever we have done till now. And if you have understood the concept, you can answer any questions. You can answer any question. Suppose there are company has two business. Business one, business two. You can say factory one, factory two. Factory one, factory two. Factory one is profit making. Factory two is loss making. Quite possible. Now suppose the current year loss is 20 crore. It is 20 crore loss and this is 100 crore profit. Quite possible. Understood? Because factory 2 was a loss making factory and they estimated that they need to continue this factory for at least 2 years to fulfill some contractual obligation. Even though it is a loss making, they can't close down the factory for the coming 2 years. Quite possible. Yes or no? Because of some commitment, some contractual commitment. Quite possible. Yes, sir. So they need to continue for the 2 years. And after 2 years, once all the commitment will be over, then they will close down this factory. But they have estimated that in future, due to the operation, because they will do some operations, so future operating loss they have estimated at this point of time, at the end of current year. At the end of the current year, they estimated that future operating loss of 2 year will be at least 50 crore. Will be at least 50 crore. Understood? So we are not discussing about current year loss. Current year loss will be recognized. Already SOPL will be prepared and it will be recognized. We are discussing about future operating loss. So whether we should create any provision for future operating loss. Should we create any provision for future operating loss? What do you think? Yes or no? Yes or no? No. And contingent liability? Whether we should disclose the fact? Whether we should disclose the fact? Yes or no? Now you are saying yes, no, okay, I have understood, yes, no, okay. Once again, you need to give the reason why you are saying no provision. Why no provision? Because can you see it is based on future event. It is not based on past event. And they have 100%. Neither provision nor contingent liability is outside the scope of this chapter. Outside the scope of this chapter. The very simple word. Good question. Normally what happens, it is very simple point for future operating loss. I will say this particular Ind AS will not be applicable only. So neither provision nor contingent liability as it is related to what? Future event. Correct. The next point is about, I think no discussion required about future operating loss. You have understood. Now any question of this nature, they can change the case study. But can I say this concept remains same. I have created one case study right now. In exam, what case study is going to come, that I don't know. You also don't know. Yes or no? But the concept will remain same now. Once again, the reading of the concept is more important than doing the questions for this type of particular Ind AS. There are some chapter where solving is required. Practical questions will be there. For that, lot of practice required. For example, consolidation chapter, business combination chapter. In that chapter, we'll do lot of practice. But in this type of chapter, can I say, depends upon concept. So our focus should be on concept of questions. Our focus should be on concept. Chalega? Then the next point is executory contract. First, what do you mean by executory contract? Which are? 1 minute. which are yet to be executed. Which are yet to be executed by whom? By both the party, either fully or partially to an equal extent. Means both the party has performed some obligation to an equal extent. To an equal extent, so that became an executory contract. So what do you mean by executory contract? Are the contract under which neither party has performed any of his obligation, or both the party have partially performed the obligation to an equal extent. Got this point? So you know about executory contract from Contract Act only. So the objective is not to define this particular term. Now the question arises, whether Ind AS 37 is applicable to executory contract. Let me take one example. Let me take one example. Suppose A Limited has done one contract with B Limited, correct? To purchase a machinery at rupees 10 lakh after 2 years. After 2 years. So they will purchase machinery after 2 years, and after 2 years, once the delivery received, they will pay 2 lakh rupees. So right now the contract has been done. It is an executory contract. It is not an executory contract. Can I say it is an executory contract? Because both the party has not performed their part of obligation. B Limited has not delivered the machine. A Limited has not paid the amount. So both the party has not performed their part of obligation. Therefore, it become an executory contract. Contract you understood? But a contract has been done. Now the question arises, in the books of A Limited, because they have done a contract to purchase machinery, so they have an obligation to pay 2 lakh after 2 years. So whether they will recognize the liability, yes or no? They will recognize the liability of rupees 2 lakh. What do you think? Why no? Once again, can you see this is nothing but future event? Even though contract done, even though there is a contractual commitment, there is a commitment to pay 2 lakh. But can you say what Ind AS 37 says that it is actually not a liability? Because liability means what? Present obligation arising from past event. This is there is an obligation. I am not saying there is not an obligation. So of course there is an obligation, but due to which event? Future event, and therefore Ind AS 37 says if for this particular contract Ind AS 37 is not applicable. Therefore, any executory contract Ind AS 37 will not apply, and there is no need to recognize any liability. There is no need to recognize any liability. Simple. I hope you have understood. There can be any more example also. So only just you need to find out whether it is an executory contract. If yes, then Ind AS 37 not applicable. There is no need to apply Ind AS 37 in this, and no need to recognize any liability. But let me change the question. Let me change the question. Right now, as per this particular example, Ind AS 37 is not applicable. Now I am changing the same question. What happened? After 6 months, the same question was asked in exam. Whatever example I am giving now, the same question was asked in exam, CA final exam. So after 6 months, what happened? A Limited changed the production process. They changed the production process due to any reason. There can be any reason. New technology came or whatever. Correct? They changed the production process. And now they don't require this machinery. Quite possible. They don't require this machinery. Now the question is that whether they can cancel the contract. Because any contract is actually non-cancelable contract. Non-cancelable contract, why? Because contract means what? Which is enforceable in the eyes of law. So if A will cancel, B will file a case against A. Correct na? B can file a case against A na? Therefore it is a non-cancelable contract. So what do you mean by non-cancelable contract? Non-cancelable contract means any contract which can be cancelled, but upon payment of penalty. Upon payment of penalty. Understood? So whenever I say it is a contract, contract are always non-cancelable. If it is cancelable contract, I will say it is not enforceable only. Suppose we have done one contract right now. I will teach you, I will teach you, and you learn from me. But any party any party have a right to cancel the contract. So can I say I started teaching, after one day say bye bye. So whether you can file a case against me, no. It is not a contract only. It is not a contract. Or we decided, just try to understand, if like we have done one contract that I will teach you, but first 5 days I'll give demo class. So can I say first 5 days it is not a contract. Once after 5 days you started coming, from the 6 days if you are coming in the class, that become a contract. Means you are supposed to pay the amount on which day? On the after the completion of demo class. After the completion of demo class. So it will become enforceable after completion of 5 days. Are you able to understand this? I hope you have done in your contract act. I don't know whether this type of example have been given or not, because I don't teach law. But have you understood? Correct. So change in the production process after 6 months. Now A does not require this machinery. A does not require this machinery. So can you say right now A has two options. Either purchase machinery and pay the amount, or cancel the contract if there is some penalty clause. So penalty clause may or may not be there in the contract. It is not always that there will be penalty clause. So you need to read the question carefully whether there is a penalty clause or not. Quite possible there may be penalty clause or there is no penalty clause. Correct? Got this point? What I am saying. So can you say it has two options. Option is what? Either purchase machinery, either purchase machinery at rupees 10 lakh and the payment done after 2 months, whatever the contract date, means on the settlement date. So it will be settled after how many years? 2 years. Means 1.5 year is left. 1.5 year is left. Or pay penalty, or pay penalty, suppose of rupees 50,000. Of rupees 50,000. It is given the contract. A pay penalty of rupees 50,000 right now. Correct. So in this case, can I say because you have done one contract which is an executory contract, but on this date what Ind AS 37 says, it become onerous. It become onerous on this date. On this date means at this point of time when they have changed the production process. So at this point of time the contract become onerous. Why the contract become onerous? Because can I say whatever the cost of meeting this obligation is more than the expected benefit from this contract. So no benefit, they will purchase the machinery of no use, and it is quite possible if they will sell that machinery, no realizable value. No realizable value. I can also write down one more point. The NRV of this machinery is nil. If they will purchase the machinery, they cannot sell in the market. They cannot sell in the market. Why? Just try to understand. If I purchase a projector for my own use, can I sell in the market? No, it is not possible, because I am not the vendor of that projector. It is very difficult for me to find out the buyer. Understood? For me, it become useless. It happens with me. I purchased one time one camera, and that was not of use for me. Until now, it is with me because I have never found any customer for that who will purchase from me. And whoever will purchase, they will not give the whatever. They will not give the exact price. Means it can be sold, but can be sold at very nominal price. Can be sold at nominal price. So it is, suppose it is given NRV is what? Nil. So can you see the expected benefit from this contract is less than the cost of meeting that obligation. Therefore, the contract become what? Onerous. And once the contract become onerous, Ind AS 37 says that Ind AS 37 will be applicable. And to calculate, you need to recognize the amount of provision. You need to recognize provision. What will be the amount of provision from your point of view? Means can I say this or this, whichever is lower. Same thing is given. Same thing is given. Once again, can I say I have not said lower. You have applied your common sense. So A or B, whichever is lower. Correct. So what India 37 says, the amount of provision will be the equal to the will be equal to the unavoidable cost. And unavoidable cost will be equal to lower of A and B. A is equal to cost of meeting that obligation. B is equal to any penalty payable to to cancel the contract. To cancel the contract. Understood? Simple. Yes, sir. What is given? An onerous contract is a contract in which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. I think the definition is very simple. Definition is very simple. चलेगा? बोलो. 1 minute. An onerous contract is a contract in which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to receive under it. Definition is very clear. Correct. I'm coming to you. Don't worry. Correct. Then what will be the amount of provision? In this case, the amount of provision will be equal to unavoidable cost, which will be lower of cost of fulfilling the obligation, cost of fulfilling the obligation, or any compensation or penalty arising from failure to fulfill it. Got this point? Correct. Now the point arises, what do you mean by cost of fulfilling the obligation? What do you mean by cost of, means which cost will be considered? Which cost will be considered? Because can I say you need to calculate this, what is the cost of fulfilling the contract? So what they say is the cost of fulfilling the contract comprise the cost that relate directly to the contract, means all the directly attributable expenses will be taken into consideration. All the directly attributable expenses will be taken into consideration. Means any cost which will be incurred only to fulfill that contract will be considered. Any cost which will be incurred even though that contract is not fulfilled, that is not to be considered. Means can I say any ongoing expenditure that will be incurred even though that contract is not fulfilled, that cost will not be a part of this particular provision. Understood? Correct. So costs that relate directly to the contract consist of both the incremental cost of fulfilling that contract. Incremental cost means what? Any cost which will be incurred only when such contract is fulfilled. That will be incurred only when such contract is fulfilled. That become incremental cost. Incremental cost. Just try to understand, if I am taking this batch right now, are you able to understand? So if I want to find out unavoidable cost, whether the salary expense of my employee will be considered, yes, that will be incurred even though, because I need to pay to my employee even though I am not taking this batch, that will be incurred or not. So therefore that is not an incremental cost. That is not an incremental cost because I need to pay, because the fixed salary, even though there is no face-to-face classes, even though there is no classes I am taking, even though I am not recording the classes, I need to pay that salary amount. Therefore that is not an incremental cost. But can I say this electricity expense of this classroom will be incurred only when the class is going on, otherwise I will not come in the class. There is no power use. It means it become incremental cost. I hope you have understood. Correct? Yes, sir. For example, direct labor and material cost. Direct labor means what? Which is required for that production process. Understood? An allocation of directly attributable costs, and there are some costs which are actually allocated. So we can also add some allocation cost. So an allocation of directly attributable cost, for example, the depreciation for an item of PP used in fulfilling the contract, among others. For example, this camera I use in my two classes, one in this class and one in some other class. So if I am not taking any class in this particular classroom and I am taking classes in some other classroom, so can the camera should be, the depreciation of the camera should be allocated. The depreciation of this camera should be allocated. So how much portion of depreciation which is allocated to that particular class where I am recording the my lecture, that should be taken into consideration. That should be taken into consideration. This become what? Cost of fulfilling a contract. Cost of fulfilling a contract. Understood? I hope you have understood. So what do you mean by unavoidable cost? What do you mean by unavoidable cost? Unavoidable cost of meeting the obligation under the contract are only that cost which are incremental. Which are incremental. Already I have said, because incremental costs are unavoidable. Because that will be incurred only when what? That contract will be fulfilled. So any incremental cost to which will be incurred for the performance of that contract will become unavoidable cost. Will become unavoidable cost. However, this unavoidable cost will not include allocated cost that will be incurred even if the entity fulfill the contract or they will not fulfill the contract. Means I have given the example. Salary expense of my employee will be incurred even though the contract is not fulfilled. That is not included in the unavoidable cost. Chalega. This is a very important para from which question can be asked in multiple choice question. Multiple choice question. This also you have understood. So have you understood the meaning of unavoidable cost? You have understood the meaning of unavoidable. You have also understood the unavoidable cost will be lower of point number A, that is the cost of fulfilling the contract, and B, penalty payable to cancel the contract. Correct. Can you say if an entity has a contract that become onerous, so that point of time it become onerous, can you say Ind AS 37 will be applicable, but we need to wait for the reporting date. Means because we recognize provision on reporting date. It become onerous at some point of time. At that point of time, we don't recognize provision. Provision will be recognized on year end only. On year end. So the present obligation under the contract shall be recognized and measured as a provision. Correct. This also you have understood. Now you can ask me a question. What was your doubt? Chalo, let me change the question. This same question was asked in exam. Therefore, I have taken NRB is equal to nil. Suppose the NRB is not nil. NRB is equal to, what was that? It was 10 lakh na. It was 10 lakh. Suppose NRB is 1 lakh. You can sell at rupees 1 lakh. Then it become 10 lakh minus what 1 lakh. Then point number 1 will become 9 lakh. Point number 1 will become 9 lakh. Or suppose the NRB you can sell, because you are a good businessman, you can sell at 9 lakh 50,000. So this will become 9 lakh minus 9 lakh 50,000. It will become what? 50,000. Then 50,000 and 50,000 both will be same. As per the question. As per the question. Then lower of this both are 50,000. So you need to create a provision of 50,000. You need to create a provision of 50,000 depending upon the information given the question. Chalega. Have you understood? Your doubt is over. Correct. Understood. Now there is one point given which is related to Ind AS 36. Just try to understand. You purchase one machinery. Machinery become a property, plant and equipment. And for property, plant and equipment, for impairment loss, Ind AS 36 is applicable. So what Ind AS 36 is that if you have some property, plant and equipment and there is some indication that value of that asset has declined, then calculate impairment loss. So in this case, can I say you purchase one PP and there is no future economic benefit? So can I say impairment loss is also there? So the question is that first we'll apply Ind AS 36, we will apply Ind AS 37. Understood? So what Ind AS 37 says that first apply Ind AS 36 for the asset which are dedicated for that onerous contract. If Ind AS 36 is applicable. So first we'll apply Ind AS 36 and then for balance loss we'll apply what? Ind AS 37. Understood what I am saying? But this point you will be able to understand when you have done Ind AS 36. But thora you have understood? Thora you have understood now. But this point, the Ind AS 36 means impairment loss for property, plant and equipment and etc. Etc. means some other asset also. Detailed discussion will be done under Ind AS 30. 36. So what they have said? Before a separate provision for an onerous contract is established, an entity should recognize any impairment loss that has occurred on the asset used in fulfilling the contract in accordance with Ind AS 36. Then create provision under Ind AS 37. Have you understood? From my point of view, till now, from this point, no question have been asked. But it's my feeling that someday they will achanak se create a question on this. So I'm just writing important. There is no question based on this. But can I say once again, what is my viewpoint? Just write whenever new questions come in exam. I mean, I don't know what type of question they are going to create. I can create n number of questions, but I don't know what type of question they will create. But can I say if you know this point, you can at least attempt that question. Whether you are doing correct or wrong, that they will decide. But you can attempt the question now if you know this point. That is the only point you need to understand. When a question is coming, if you are able to attempt, the objective is fulfilled. Got this point? What I am saying to yes, if you have understood this and you know Ind AS 36, the first apply Ind AS 36, then apply Ind AS 37. This much you have understood. Now any questions come, you apply that. Whether you are doing wrong or correct, let them decide. But some marks will be given. Some marks means if you are getting 50%, objective achieved. Objective achieved. But if you are not able to attempt it, then 0 marks. Then 0 marks. So our objective should be that we have understood a concept. Now whatever question they will ask, we'll apply that concept in exam hall. Chalega? Yes, sir. This also you have understood. There are some good questions given. Let me take one illustration based question. However, that type of question I don't know whether they will ask or not. But when we read that question, the concept will become more clear. The concept will become more clear. And therefore, I like that question. This question 31. This is a illustration based question. To understand the entire part of this particular topic. Come to question 31. Now what you should do? Write down this 31 before that topic in your Ind AS Saaransh book. Means Ind AS Saaransh book, you write down question number 31. So that whenever you are doing this concept, read this question 31 also. Okay? 31. What they have given? SBCL manufacture heavy equipment for construction industry. An order for supply of 90 equipment was received from ABIL. Hey, 1 minute. We are doing question 31. SBCL manufacture heavy equipment for construction industry. An order for supply of 90 equipment was received from ABIL. Okay. The unit price of the equipment was agreed at 190 lakh each. Unit price is given. 64 equipment was supplied during the year 2001-2002 and the balance quantity remaining to be supplied on 31st March 2002. It become executory contract for how many units? How many units? 90 minus 64. How much? 26. It means it become executory right now for 26 units. HBCL has 5 equipment in the inventory as on 31st March 2002. So out of this 26, how many equipment is already in stock? So 26 minus 5, how much? 21. HBCL considered that contract was an onerous contract and therefore the NRV of the inventory has been taken as the value of inventory as on 31st March 2002. It is given the question, it become onerous contract. Is given the question, it become onerous contract, correct? So once it become onerous contract, first we apply Ind AS 2 in inventory. Whatever is available on that date, Ind AS 2 is applicable. As per Ind AS 2, we have measured at cost price NRV, whichever is lower. Whichever is lower. So that has been done. That has been done. The management of HBCL contained that costs incurred toward administrative overhead, finance charge, and research and development expense, sales overhead, headquarter expenditure, etc., are considered as a period cost. What do you mean a period cost? This will be incurred even though such contract is not fulfilled. Means even though the production is not yet done. Means even the production not done. Correct? So that become period cost, or we call it ongoing expenditure. Correct? And hence not considered for the creation of provision. So I say this is one illustrative question. Means solution is given the question only. Means when the similar question will come to this para, they will not write. They will say these are the period costs, but they will not write in the exam question that this will not be considered for provision. So you need to understand by your own, because it is a period cost, it will not be included in the amount of unavoidable cost. I hope you have understood. Correct. So this para is important. Which para? Can you say hence not consider for creation of provision? This will not be given in your exam question. The same question came in exam. Got this point? Yes, sir. Hence the same have not been included in the computation of unavoidable cost. Understood? But this will not be given in your exam question. The management of HBCL has submitted a detail of costs that have been considered for the creation of provision. Okay, this para will also will not be given. They will say that these are details of other costs. They will say like that, na, these are the details of other costs. Chalega? Yes, sir. Material cost, of course, it will be included. Correct. Labor cost, of course, it will be included. And overhead costs, can I say, which are directly attributable and which can be allocated, will be also included. So this all will be included. I am not reading what I've included, what are the component of this particular cost, that you can read. Accordingly, the provision has been considered. Accordingly, the provision has been made considering the above cost only. Okay, sir. Understood. The value of provision created for 21 remaining equipment. This 21 will not be given. 21 to we have understood now. 21 we have understood. This 21 will not be given in your exam question. And what I am saying, very good question. I don't know whether same question will be asked or not, but they can modify it. They can anytime modify it. To be procured as per the working shown below. Particular cost of production, which include material cost, labor cost, factory overhead and material overhead as above, is 199. Okay, sir. Selling price 190, it can be sold at 190. Differential cost per equipment is 9. Means this 199 minus 190 means it can be sold at what? 190. So it means what is your loss? 9 rupees. Differential cost of 9 lakh per equipment for 21 equipment is 189. And they have not given any penalty clause. They have not given any penalty clause. So you will create provision for what amount? 189 means in the question only solution has been given, but I hope you have understood that if suppose they have modified this particular question from your examination point of view, you can also do it by your own. You can also do it by your own, but you write down all the para of India's 37 ki what is the meaning of incremental cost or unavoidable cost. Got this point? Whether the company's accounting treatment for the cost of creation of provision toward onerous contract is in the line of provision of India's 37 is given. Yes, it is in the line. They have defined everything. Whatever we have read till now, everything is given. And at the end they have said, yes, SBCL is correct that a period cost will not be considered for measurement of cost for the purpose of creation of provision on onerous contract as they do not relate directly to fulfilling the contract. Accordingly, the SBCL has correctly measured the cost of creation of provision for onerous contract by considering the material cost, labor cost, everything is given. It means we need to create a provision of 189 lakhs. Good question. So, understood. Good question. If they modified, understood. चलेगा. Therefore, check करो. I have given in this second category. Once you should read by your own. Once this question should be read by your own. चलेगा. Yes, sir. Done. Any doubt? There was one exam question. I would just like to inform you what type of question they have asked in exam. Already I have taken that into consideration. This question was newly introduced in MTP. Very good question. Let's see. An entity has a contract to purchase 1 million unit of gas at 23 paise per unit, giving a contract price of 2,30,000. So of course, 1 million means how much? 10 lakh. 10 lakh into 23 paise, how much? 2,30,000. It is given only. Okay. This institute is very good. They will give everything. Okay. The current market price for similar contract is 60 paise per unit. Means if you purchase on a current basis, how much you need to pay? 16 paise per unit, giving a price of 1,60,000. Correct? All of the gas purchased by the entity is used to generate electricity using the dedicated asset. Determine in the following situation whether the contract is onerous and provision to be made when the electricity is sold at a profit. You purchase at what? 23 paise. It is currently available at 16 paise. But you can sell the electricity at profit. So it is not a onerous contract. It is not an onerous contract. Correct now. So they have given it is not an onerous contract. 1 marks you will get. This question will be of 5 marks. So 1 marks to you are getting. The electricity is sold at a loss. Point number B. And the entity makes an overall operating loss. The electricity is sold to a wide range of customers. Now the electricity is sold at a loss. In this case, but whether it is an onerous contract or it is not an onerous contract. Of course, it is an onerous contract. Because if it is going to be sold at loss, then it become a burden for us. Once it become a burden for us, it become an onerous contract. So what they have written? To the extent that it is still a loss after the asset had been written down. After the asset had been written down. As per India's 36. Understood? However, they have not asked that point, but they have mentioned that. Why they have mentioned? Because they have written that all the gas purchased by the entity is used to generate electricity by using dedicated asset. So if you will not use that asset, it is an indicator that asset has been impaired. So first you need to apply India's 36 for impairment loss, and the balance loss will be accounted as per India's 37. But you can't calculate because that information has not been given. So they have just given one theoretical answer. The electricity is sold to a wide range of customers. The entity first consider whether the asset used to generate electricity are impaired. To the extent there are still a loss after the asset have been written down, a provision for onerous contracts should be recorded. Correct? Till now this para, from this para, no question have been asked in exam, but they have given in MTP. The last, the entity sells the gas under a contract which is no longer need to a third party for 18 paise per unit, 5 paise below cost. The entity determined that it would have to pay 55,000 to exit the purchase contract. In this contract, of course, it is an onerous, but it is an onerous now. The entity sales means what they are saying. Entity can sell the gas to the third party at 18 paise. They purchase at what? So of course it become an onerous contract now. So 23 minus 18, how much? 5 paise into 10 lakh. How much? 50,000. What was the penalty? Whichever is lower. Therefore, they should create a provision of 50,000. Correct. What is given? Check karo. The only economic benefit from purchase the contract costing rupees 2 lakh 30,000 are the proceeds from sale contract, which are rupees 1 lakh 80,000. Therefore, the provision should be made for the onerous contract element of rupees 50,000 being the lower of cost of fulfilling the contract and the penalty cost for cancellation. Same thing is given. It is an onerous contract because it can be sold at a price lower than what? Cost price. It can be sold but at a loss now. So can be sold. If it is already sold, then there is no need to create provision. It can be sold to a third party. So right now it become a onerous contract. Create a provision. Good question. Good question. आगे चले. Doubt पूछ ले जाओ. If there is some doubt. Hmm? हाँ तो you purchase at 23 ना. Hmm? What you are? 1 minute. 1 minute. What you are saying? I am not able to understand. If the contract is exit only, it means they are not purchasing only. So better you purchase and sell na. You'll pay. You are paying 55,000 also na. 1 minute. 1 minute. 1 minute. You are saying that 16 paisa mein you will purchase and you are selling at what? 18 paise. No, no, just try to understand one thing. One, one point. Right now, I have understood your point. Right now, we are not deciding what he will do. You take your own management decision. I am not saying that don't do whatever you have said. This is your management decision. Right now, we are applying what we are creating provision as per management decision or as per India 37. What you will do that we don't know. Whether you will purchase, whether you will not purchase at 16% that I know, I don't know. That is your future conduct of business. That is a future conduct of business. Quite possible it is given at 16 paise, but when you started purchasing it, the price fall down. That is the future conduct of business. 16 paise is not at all relevant. Right now, this contract become onerous. This contract become onerous. Now, what you will do that you may exit, you may not exit. That I don't know. Are you getting what I am saying? We are applying India's 37 key in at this point of time. You have two options: either purchase or exit. Either purchase or exit. As per this particular point, you will opt for what? Purchase only. So you need to create a provision of what? 50,000. Your actual happening may be different. Provision does not mean it is an actual loss. This is an estimated loss. Your actual loss may be different depending upon your future conduct of business. For that too, we are not applying India's 37 now. So what is your decision? What you will do in future? That is something separate thing. But I'm happy that you have applied your common sense. Chalo, theek hai. But no, your answer is not wrong. Not correct. So good point that you have realized that you have asked that question. Now in exam you will never write down that. If you are writing down that, you are getting zero. Anda. Correct? Understood? So good only now. You have got some confusion. Some doubt is coming. Correct? Yes, sir. So because doubt came, because you have a doubt, so everyone give a star mark in this. Everyone give star marks. Whenever doubt is coming to any point, give a star mark. Understood? Whenever any doubt is coming to any student, everyone give star mark. Everyone give star mark. Understood? ये भी हो गया. One more question. One more question. Question 24. This question, the same example I have taken. I'm just informing you. Sun Limited enter into a binding agreement with the Moon Limited to buy a custom-made machine for rupees 4 lakh. At the end of 2017-18, before delivery of the machine, Sun Limited had to change its method of production. I have given us the same example. The new method will not require the machine order, which is to be scrapped after delivery. The expected scrap value is nil. I said in the exam question it was given nil. Give, Given the asset is yet to be delivered, should any liability be recognized for the potential loss? Yes, because it become onerous contract. First answer will be this. But you need to define what is onerous contract. If so, give reason for the same, the amount of liability as well as the accounting entry. What will be the amount of provision, amount of loss, amount of provision, because nothing has been given about penalty. The amount of provision will be how much? What is the purchase price? 4 lakh. 4 lakh. And this journal into what? PL account debit to provision for onerous contract. To provision for onerous contract. And this, the PL account debit, what journal entry they have given? They have given two journal entry. First, they have written onerous contract expense account debit to provision account. Then PL account debit to expense account. So we can pass two journal entry expense account debit to provision. Then PL account debit to expense. Normally we pass one compound journal entry PL account debit to provision account. So you can pass that journal entry also or this journal entry also, your choice. Your choice. Understood. Chalega. Have you written all the question whatever I have done in this point? Written now. This you write down. Ki this much question I have done. And whatever question I am doing now, there are good quality of question. But it does not mean there may be some other good question also. So I can't do all the questions now. Then what you will do? If I am doing all the question, then what you will do? Chalega. So now whenever you are finding some other question of good quality, just mention here only. So at a time of revision, last revision, you do only these questions. If you have done this question now, so your revision completed. You are not supposed to read all the question just before exam. Yes, sir. Done. Now let us. This point you have understood. Onerous contract also you have done. Correct. So we have done reimbursement. We have done future operating loss. We have done executive contract. We have done onerous contract. There is one more special point about restructuring that we'll do at the end. Okay. Before that, there are some small point. Changes in the amount of provision. Of course, can I say every year when you do reassessment for the amount of provision due to new information, so some new information may came in the next year. Because of that reason, we need to do the reassessment for the amount of provision. Any reassessment done, there can be changes in the amount of provision, they can be increased or decreased. Whatever changes has been done, that will be transferred to profit and loss account. It is quite possible that provision is no longer required. The provision is no longer required because present obligation might become possible obligation, or there is no obligation only. Quite possible, so you need to reverse the amount of provision. Correct. The provision must be reviewed at each reporting date and adjusted to reflect the best current estimate. If provision is no longer required as it is not probable, amount of provision must be reversed. Correct. Understood. Next point, point number 10 is unwinding of provisional amount. Just try to understand whenever we calculate any present value, so there will be some interest element. So can I say in future we will pay the present value or future value? Future value. So it means present value need to be converted into what? Future value. So the difference is what? Interest. So whenever we have a recognized provision at present value, so we need to convert that present value into future value by adding what? Interest. So when you add interest, the carrying amount of provision will increase with the amount of interest. Such interest will be considered as borrowing cost, will be charged to what? Profit and loss account. Understood? This particular point is known as unwinding of provisional amount. A new term in your life. So whenever we say unwinding of provisional amount or unwinding of present value amount, it is nothing but adding what? Interest. So new term. So sometime in the question they will say unwinding is required. Unwinding means what? Add interest. Add interest. New term in your life. Correct. So when discounting is used, the carrying amount of provision increases every year. That increased amount is treated as borrowing cost, and this borrowing cost will be charged to profit and loss account. Chalega? Correct. Let me take one question. However, you have understood. Question is not required. You know about present value. You know about future value. But फिर भी one question. Let us take. Come to question number 10. X Telecom Limited has an income tax litigation pending before appellate authorities. Legal advisor opinion is that X Telecom Limited will lose the case and estimated liabilities 1 crore may arise in 2 years. May arise in how many years? 2 years. The liability is recognized on a discounted basis. The discount rate at which the liability has been discounted is 10%. It is assumed the discount rate does not change over the period of 2 years. How should X Telecom Limited calculate the amount of borrowing cost? Understood. Correct. It means if I say question number 10, this is 2 year. So this is Y0, Y1, Y2. We are creating provision at this point of time. Provision that will be 1 crore multiplied by what? 0.826 na? 0.826. 10% or 8%? 10% 2 year how much? 826 only. Correct. Acha, now one question arises, sir. When you are calculating present value factor, how much decimal we should use? Very common question. However, it is should not be asked by a CA final student. This type of bakwas question. But normally, as a student, this doubt will be there. Sir, from exam point of view, we should take 3 decimal, 4 decimal, 5 decimal, 6 decimal. Just try to understand. There is no such rule. There is no rule given by ICI. Correct? It means, in simple word, I will say, whatever you have taken, write down. You have taken 3 decimal, write down 3 decimal. You want to take 4 decimal, write down 4 decimal. You want to take 6 decimal, write down 6 decimal. Your choice. However, as a general pattern, we should use either 3 or 4. But whatever you are using, mention that. Normally, what I have seen, student write 8 to 6. But in calculator, what is coming? Full. What is coming calculator? Means if you'll do in my calculator, what is not going? It is 82644628099. This is only correct. You are writing 8 to 6, but multiplying by this, so what will be your answer? Your answer will be something 80, 82 lakh 64,000 something, which will be different from this answer. From my point of view, that is not correct. If you are writing 8 to 6, so multiply by 8 to 6. Because I don't know whether they will deduct marks or not. But general rule is what? You have taken this assumption. Then why you are multiplying with full amount? Then write down full only na. Sir, इसमें क्या होता है? देखो, I also don't know. From my point of view, if I am checking your paper, no marks will be deducted. But who is checking your paper? Who is checking your paper? No, no, no. Arey, CA is checking. But who is that person? You don't know what is going in his life. Correct na? So don't take any risk. So I will just give an advice. Whatever present value factor you want to take, but write down that. And whatever you are writing, multiply with that. That is my suggestion. There is no rule. There is no rule in this. There is no rule. Correct? Now you have written this, multiply with this only. 82 lakh 60,000. So your answer change हो गया ना? Is 82 lakh 64. My answer is by 82 lakh 60,000. So can you see if you are writing 8 to 6, but if you are writing this, understood what I am saying? कितना आ रहा है? 8 to 4 462. तो कहाँ से tally हो गया? What is this? Means the checker will say, why? कहाँ से आया? Are you getting? Can I say I have a right to deduct marks? Just try to understand emotions. 8 to 6 is calculating calculator. There is a high chance they may deduct the marks. High chance. If I am checking, I will not deduct because I know everything. But who is checking your paper? Understood this point? Correct. Understood this point? Now, what will be your answer? The Y0 mein what journal entry will do? PL account debit to respective provision for was the case? It was some litigation, na income tax litigation. So you can add on provision for legal damages or whatever if you want to write down. Okay. It is 82 lakh 60,000. Then year 1 you will say borrowing cost transfer to PL account debit borrowing cost na. You can add on interest also because they have calculate borrowing cost. So better write down borrowing cost. I am writing full only. You will say what is this? Borrowing cost and transfer to what? PL to what? Provision 8,26,000. Then year 2 then I tell what? Borrowing cost transfer to PL to what? Yes, last year it should be balancing figure 1 crore minus the sum total of these two because of some approximation difference. How much it is coming? 9 lakh 14,000. Then it will become 1 crore. If it is settled at the same amount, pay that amount. But the settlement journal entry they have not asked. However, they have not asked journal entry. I have just given journal entry to inform you what will be journal entry. They have asked only the amount of borrowing cost. The amount of borrowing cost first year, second year. Chalega? Correct. Now, if you see, your answer will not match with the answer given by ICI. Why the answer is not matching? What they have done? They have calculated in some other way. Ultimate answer remains same. Means there will be some approximation difference. What they have done? See, can you say at this point of time it become 0.909 for the balance 1 year? So they have again calculated 10 lakh into what? 0.909. How much? 9 lakh? Eh, 90 lakh. 90 lakh? 90,000? 909 na? 90 lakh 90,000. And at this point of time it will become 1 crore. So how they have calculated interest? The difference between these two. Difference between these two is what? How much? कुछ भी बोलते हो. Calculate and give me. How much? 8 lakh 30. 8 lakh 30,000. And the difference between these two is what? 9 lakh 10,000. So you can see your answer will not match. But again, both are correct answer. Both are correct answer. Now ICI has given answer in some other way. We have calculated in some other way. And we can't understand why they have done in that way now. So my answer is also correct. Your answer is also correct. ICI answer is also correct. So don't be bothered about that. So if I have done in this way, but your answer is not matching with ICI solution, exactly there is some approximation difference. So approximation difference may change because we have taken some other way of calculation. Understood? So don't ask me this type of bakwas question ki sir your answer is not matching with ICI solution. Then we need to memorize ki for this question ICI have done this way, we should do in this way. For other question ICI have done in this way, we should do in that way. That is not possible. Practically impossible. Okay, sir. But I have just informed you because one of the students asked me, sir, how they have done. Arey bhai, you can read and you can understand by your own now because you are at CA final. Correct? Got this point? So this answer is also correct. If you want to follow this answer, you can follow this also. Okay, sir. Yes, sir. This is also done. Next point is what? Use of provision. Use of provision means what? What they want to say. Suppose provision is no longer required. you have created a provision and that provision is no longer required. So can you use that amount of provision for other purpose? No. You can't use the amount of provision for other purpose. The provision amount can be used only for the expenditure for which it was created. And therefore, if provision is no longer required, reverse it. Reverse chalega. So a provision should be used only for the expenditure for which it was originally recognized. In other words, it cannot be used for any other purpose. Then journal entry, what I will say. If provisional amount is related to any expense, means provision is related to expense, journal entry is expense account debit to provision, then PL account debit to expense. Or you can pass one journal entry PL account debit to provision, your choice. PL account debit to provision. When you reverse it, journal entry what? Provision account debit to expense or provision account debit to PL. Correct. I think in this journal entry, no clarification required. But sometimes the amount of provision is directly related to acquisition or construction of an asset. So if it is directly related to acquisition or construction of an asset, then the journal entry will be asset account debit to provision. Means the amount of provision will be capitalized to the cost price of asset. In that case, what journal entry will do? PP means whatever asset account debit to provision, and if you are reversing that, reverse the journal entry. Journal entry will what? Provision account debit to asset. Understood? Have you understood? Yes sir or no sir? ऐसे ऐसे कर दो. Understood? चलो. Now, because you said understood, it means I can ask question. Because you said understood. So can you give me one example for this? You said understood. This to a lot of example you have. Understood what I am saying? You said understood. So can you give me one example for this? Repair and maintenance. That will be capitalized. Whether repair cost you will capitalize or charge it to PL. Repair expense will be capitalized. It is capitalized now. Excellent. Means if you have done AS10, so you have done one DRSL. DRSL means decommissioning, restoration, civil liability. It means once you are saying DRSL now, it means CA inter, so you are perfect. And I am very much happy. I am very much happy if you are saying DRSL till now. I have never got this type of answer in my batch. And when I am receiving this type of answer, it means CA final will be very easy for you. Think about rank. Think about rank. So very good. I was expecting this only ki, do you know entirely AS10? Of course, I will explain under Ind AS 16. The same point I will explain. If you have forgotten, nothing to worry. But why I'm asking question? Why I'm asking question? So that you can also reply on the basis of CA inter. Correct? So very good. This point I will take, means I will take one example on this, but not now. Because if you have forgotten, so I need to spend some time on this, but I don't want to spend some time on this right now. So, or it will be automatically covered. There is only one example. Only one example. That is based on Ind AS 16 means AS10 whatever you have done. Ind AS 16. Write down Ind AS. Write down refer Ind AS 16. Write down. Chalega? Yes sir. So I am not taking that example right now because it will be automatically covered under Ind AS 16. Correct. Then come to the one more special point about restructuring. About restructuring. Now restructuring means what? When I say restructuring means what? Restructure. Restructuring means what? In simple word, if I say it is any activity or any action or any program taken by entity which will change the scope of business materially, which will change the entirely the scope of business. That is known as restructuring. Means suppose I have three business and if I close down one business, it is a restructuring. Or if I change the location of business, that is also restructuring without entering into liquidation. Means the going concern is not affected. So if the entity is liquidated, it is not restructuring. Common example of restructuring will be amalgamation also. If you are purchasing any business, that is also restructuring. If you are selling some business, that is also restructuring. If you are changing the location of business or shifting the location, that is also what restructuring. Example to you have understood. But sir, why you are doing under India 37 this topic? I need to explain that. First, have you understood restructuring? So restructuring means any program which changes the scope of business materially. For example, sale of division, termination of division, closing of business location or relocation of any business location. Understood. Now let me come to one example. If whenever there is a restructuring, suppose you want to close down a particular business, not entity. Means I have also many business. I am teaching final FR. There is one business. Inter is one business. Foundation, if I am teaching, that is one business. If I am teaching some other course, that is other business. I mean, right now I have decided that I will start teaching 11, 12. That is in the process. In the process. In the process. But very difficult to teach. Me means I have decided, but I am thinking twice. But I have decided let us do something for 11, 12 also. Because I have understood that kahin na kahin CA become difficult because of 11, 12. So it is my plan that I will teach 11, 12 students in such a way that CA become easy for those students. It is my under my program. So if I start that business, that is also restructuring. Got this point? If I terminate any of the business, that is also restructuring. Without going into liquidation, without going into liquidation. So at this point of time, suppose we decided that close one business, correct? But can I say actual closure will take some time? Abhi to we have decided. So actual closure, let us say we estimated that actually it will be closed at this point of time. Actually closed down. Now it will be once it is closed down, so there will be some restructuring expense. Now what are restructuring expense which are directly related to restructuring? Means it will also not include any cost of ongoing activities. Means can I say if you are paying some compensation to employee because that business has been closed down and that employee become jobless. So we need to compensate that employee. So that compensation, whatever you are paying to that employee, is that related to what? Restructuring. Because if there was no restructuring, there was no compensation. There was no compensation. So can it become a restructuring expenses? So let me take one example: termination, compensation to employee. Means you need to pay some termination compensation to employee of rupees 2 crore. And can I say that you will estimate right now only? You will do estimation right now, na? Yeah, of course, when you close down, you need to pay some termination expenses. So you have estimated that you need to pay termination compensation to employee of rupees 2 crore. Understood? I hope you are understanding what I am saying. So you have decided, should we create a provision on 31st March? This is the question. This is the question. Have you understood? Restructuring, you have decided that you are going to close down the business. Now on 31st March, before actual closure, will you create a provision for restructuring expense? What do you think? Yes or no? Why no? Excellent. Decide. I said only decided. I can decide anything. Can I say, if I have decided, it does not mean you have an obligation. It is as simple as I have decided that I will marry a girl. Will I start creating provision for a marriage expenditure? No, na. What is required? Surety. When surety will come? Family. And first to girl re nalayak family. Have you spoken to my family? Start. No, no. Can you say first what is required? Approval from whom? That girl. अरे बोलना रे. Correct. And then also approval receive. Then also commitment is not there. अभी तो approval हुआ. But there is no commitment. Okay, commitment will come when? अभी approval receive, but commitment will come when? Huh? No, no, no. I'm not going to engagement. It can be one possible situation, but the moment I have announced it, commitment come or not. Normally, when we do announcement, when we are committed. Otherwise, we will never do any announcement. Means when I was single and when I become mingle, so I have never before engagement I have never announced in the Facebook. Correct now. But once the engagement done, then to in our we say roka. Correct now. Roka means ruk jao. Now, correct now. So that time I have publicly announced that now I am committed and now I should book the provision for marriage expenditure. Understood? It means we need to wait for the commitment. When the entity is committed for that, and that time India's 37 says that there is a constructive obligation. Which obligation? There is no legal constructive obligation. So you need to find out whether there is any commitment or not. If there is a commitment, recognize provision. Otherwise, do not recognize provision. And the commitment will come if two conditions are satisfied, A and B. If these two conditions are satisfied, it means there is a constructive obligation. So we need to now understand what are the two conditions. What are that two conditions? First approval means, can you say detailed formal plan has been created by entity? Plan will be created when there is an approval only. So detailed plan has been made. Detailed plan has been made. First condition. When you create plan, when resolution has been passed, when resolution will pass, it means approval is there. Correct? Then only you create detailed plan. The detailed plan has been created. And second condition, what they say, don't write, right? Whatever I'm writing, that much you write down. When I'm saying, then that time to listen na. When I'm writing, that time write. Or whatever I'm saying, don't write. Because whatever I'm saying, that is already written. Correct? Okay, 1 second. Point number A is what? Detailed plan has been created. Second condition is what? The entity has taken any activity which initiate the plan. Means to initiate a plan will do some activity now. For example, if you want to sell a division, you have given advertisement in the newspaper for the sale to find out a potential buyer. It means you are committed to sale. Otherwise, you'll never give what advertisement. So you have done some action to initiate the plan, or you have made announcement of such plan to the person who is affected by that plan, or you have done some announcement. Announcement means commitment. Announcement means commitment. It means on this date, both the conditions need to be satisfied. If any one condition satisfied, other condition is not satisfied, it means there is no constructive obligation. Understood? Have you understood? Now let us read what is given. A provision for restructuring cost is required when when recognition criteria of provision are satisfied. Recognition criteria means what? Three conditions. Present obligation arising from past event. Outflow of resources probable and reliable estimation can be made. That three conditions must. But sir, how will understand there is a present obligation arising from past event? Means present obligation can be legal obligation or constructive obligation. For that, they have given some clarification. Whether there is a obligation or not, present obligation or not. So they have given a constructive obligation for restructuring arises when Entity has a detailed firm plan for restructuring, and entity has started to implement such plan or announce the main features of restructuring plan to those affected by both the conditions satisfied. There is a constructive obligation, recognized provision for restructuring cost. Now one doubt will come, so what will be included in that restructuring cost? Simple, but all the incremental cost. Incremental cost means what? Any cost which will be incurred only because of restructuring. Means all the directly attributable cost for restructuring. Correct to what they are saying. Measurement of provision. A restructuring provision should include only the direct expenditure arising from restructuring, which are those that are both necessary entailed by the restructuring, which are only because of what? Restructuring, and not associated with the ongoing activities of the entity. Means it will not include any expenditure which is a part of ongoing activities of the entity. Means if you are paying some salary to employee after closing down the division, whether it is a part of restructuring, no, that is the expenditure for past services. Correct. Now so that is related to what? Ongoing activities, that will not be included in the provisional amount. Correct. It means a restructuring provision do not include following costs. They have given some clarification. These are not a part of restructuring cost. For example, retraining or relocating continuing staff. If you are doing training expense, retraining, correct, or you are relocating the staff from one business to another business. For example, you have informed your employee, don't worry, we will relocate to you from one business to another business. So there will be some relocation cost. Correct. That will not be a part of restructuring provision amount. ठीक है. Marketing cost, any investment, new system or distribution network. For example, because you have closed down a business and you want to start a new business, so of course you will do some more investment. So that will not be a part of restructuring cost. Have you understood? Correct. So this point number one, retraining or relocating, marketing, investing in a new system will not be a part of restructuring cost. Got this point? Have you understood? बोलो ना. Why? You said yes, sir. No, you said why? You said yes, sir. Huh? I have not said, huh? Bolo, why? One second, I am just informing you that if you are not able to give me answer, don't say why. Yes. Say yes, sir, till you once you have understood entirely. And if you are saying yes, sir, I will ask question. Why? Fast. Hmm? Correct. Means simple, but if you should say in this way, it depends upon the future conduct of business. This is the keyword. This is the keyword. This expenditure, can you say, relate to the future conduct of business? Whether training is required, not required. Whether relocation will be done, will not be done. That entirely depend upon the future conduct of business. Whether you will do investment, you will not do investment. That entirely depends upon future decision. And therefore, for this will not be a part of restructuring cost. Correct. One more clarification has been given. Any future operating loss till the date of actual closure, because can you see, you will continue because you are committed at this point of time, but can you say business will be carried on for this 2 year, so of course there can be some future operating loss. Will you create any provision for this? No, because that is also related to future event, already explained. But can you say this will be included if the contract become what? Onerous. If the contract become onerous. So be careful about onerous contract. Be careful about onerous contract. The last point they have given, what they have given, future operating loss up to the date of restructuring are not included in a provision unless they relate to a onerous contract. From my point of view, till now no question from this para have been asked. But can I say CA final level should be asked? However, they have given good question based on this. But till now not asked in exam. I'm not understanding why they are not asking this type of question. They should ask this type of question. चलेगा? Let me take one good question. One good question. This question newly introduced. You can see RTP November 2023. A similar question we have that you do by your own. 32. On 1st Jan 2002, the directors of Johnson Limited decided to terminate production at one of the company's division. Decided. Decided. अभी तो decide किया है. No commitment. हाँ. The decision was publicly announced on 31st March. Sorry, 31st Jan 2002. Not publicly announced. Can I say announcement will be done after detailed plan only. So it is understood that condition number A is satisfied because announcement cannot be done without detailed plan. Understood what I am saying? So announcement done means condition number A is deemed to be satisfied. Condition number A is deemed to be satisfied. On which date? The activities of decision were gradually reduced from 1st April 2002 and the closure is expected to be completed by 30th September 2002. This is the estimated date of closure. Acha, you will create provision on 31st Jan or 31st March? 31st March, not 31st Jan. Okay. At 31st Jan 2002, the directors prepare the following estimates of the financial implication of the closure. They have given all estimation on which date? 31st Jan. So if they have not given any information on 31st March, we will assume the estimation of 31st Jan and 31st March are same. You need to understand emotions also. Correct. Redundancy cost were initially estimated at 2 million. What do you mean by redundancy cost? Means redundancy means the reduction in the number of employees. And we need to pay some compensation for that. That is known as what? Understood? Redundancy cost were initially estimated 2 million. Further expenditure of 8 lakh will be necessary to retrain employee who will be affected by the closure but remain with the Johnson Limited in different division. So 8 lakh is retraining expense. Retraining expense. Correct. The retraining will begin in the early July 2002. Let us estimate that redundancy cost will be 1.9 million with retraining cost of 8 lakh 50,000. Oh my god. Let us estimate. Let us estimate means what? 31st March. It means it is 31st March. Understood? Correct? Plant and equipment having an expected carrying value at 31st March 2002 of 8 million. Correct? We want at 31st March only. Will have a recoverable amount. Recoverable amount means impairment loss. In days 36, AS 28, whatever you have done. If the recoverable amount is what 1.5 million, the difference is what? Impairment loss. This estimate remain valid. So it means in this we are applying in days 36. Just write down apply in days 36, refer in days 36. So I have already informed you. Even though we have not done in days 36, we can answer this point. The division is under a contract to supply goods to a customer for the next 3 years at a predetermined price. It will be necessary to pay compensation of 6 lakh to this customer. The compensation actually paid on 31st March 2002 actually paid 31st May is 5 lakh 50,000. So actually paid on 31st May. So it is quite possible before approval of financial statement. You need to think about the approval date. Means question Ind AS 37 mixed with Ind AS 10 means AS4. AS4. So quite be possible. So you need to understand this the date. Date is very relevant. Okay. The division will make an operating loss of 3 lakh per month in the first 3 months. First 3 months means January, February, March. This is a current year loss. That will be the automatically recognized. So this is not a part of the question. This is a current year loss. This will be to recognize only. And 2 lakh per month in the next 3 months. This become what? future operating loss. For future operating loss, will not create any provision. This estimated provide accurate for April and May. बोला कि it become accurate. Whatever we estimated, actual was also same. Means they are trying to confuse you now. In exam, they are trying to confuse you. The division operate from a leasehold premises. Jabardast question. What do you feel? Question is Jabardast or not? And at CA final level, we should expect this type of question, or we should expect one case study is given where the provision will be created. That is a CA intern, na? You want that type of question or this type of questions? This type of question, but till now they have not asked this type of question in exam. Means they are not asking. Then also, students are saying question paper is hard. Are you able to understand? The division operate from a lease or premises. The lease is a non-cancelable operating lease with an unexpired term of 5 years from 31st March 2002. The annual lease rental payable on 31st March in arrear are 1.5 million. Means the annual lease rent payable is what? 1.5. In arrear means at the end of the year. The landlord is not prepared to discuss any early termination payment. Means they don't want to terminate. There is no early termination clause. Following the closure of the division, it is estimated that Johnson Limited would be able to sublet the property from 1st October 2002. Means they can't terminate, but they can sublet. Johnson Limited could expect to receive a rental of 3 lakh for the 6-month period from 1st October to 31st March 2003, and then annual rental of 5 lakh for each period ending 31st March 2004 to 31st March 2007. All renter will be received in arrear. Any discounting calculation should be performed using a discount rate of 5% per annum. You are given the following data for discounting at 5% per annum. They have given discounting factor. Now, if they have given discounting factor, can you take any other factor in 3 decimal, 4 decimal? No. Whatever given, now take that. They have given 2 decimal, you can't take 3 decimal, you can't take 4 decimal. Chalega? Understood? Now they have given present value factor of 1 rupees at the end of the 1 year. Okay. Then they have present value factor at the end of 1 to inclusive. It means what? It means it is annuity factor. Sum total of 2 present value factor. Means this is year 1, year 2. This is year 1, year 2, year 3. This is year 1 to year 4. This is year 1 to year 5. Compute the amount that will be included in SOPL for the year ended 31st March 2002 in respect of decision to the close of division of Johnson Limited. Chalo, one by one we'll do. First point. Point number 1. We should create a provision of what amount? Whether we should create a provision for redundancy cost? Yes. What will be the amount? 2 million or 1.9 million? So 1.9 million provision amount will be created. Whether we should create a provision of retraining cost? No, no provision. Correct? So only 1.9 million. Second, whether we should create an impairment, we should recognize an impairment loss? Yes. So impairment loss of how much? 6.5. 6.5 million, na? 6.5 million. That will be also charged to profit and loss account. But this is not provision. The impairment loss. This is not covered in this chapter. This is covered under Ind AS 36. Got this point? Yes, sir. Then, whether we should create a provision for onerous contract. Point number 3. It become an onerous contract now. Because there was a contract, now they will not be able to fulfill the contract. So that become an onerous contract and they need to pay a penalty of what amount? So the compensation actually paid on 31st May 2002, but they have not given any approval date. They have not given any approval date. So can you say we can assume here the 31st May is before approval of financial statement, because can you say, of course it is 31st May, April, May. So of course approval date might be after that, and they have given this point for some indication. Some indication. So actual payment, you know, and if you know actual payment before approval of financial statement, can I say Ind AS 10 will be applicable, and you should create a provision of 6 million or 5.5 million? 5.5 million. So we are taking that provision amount of 5.5 million based on the assumption. This is before what? So write down this is before, we have assumed this is before date of approval. DOA means what? If you want to write down, write down. So we have taken an assumption that 31st May is before approval of financial statement. It means we'll create a provision of 5.5. I don't know because I forgot what they have taken 6 lakh of 5.5 lakh. Oh, that is, yes, million. Now, it is how much? 0.55 million. Okay, this is also done. Then point number 4, will you create any provision? Is it future operating loss? No, no provision. Now only I need to explain point number 5. Only I need to explain point number 5. I'll wait for point number 5. First, let us check up to point number 4. Let's see what the answer has been given. Point number 1, estimate of redundancy cost is 1.9 million. Therefore, we should create a provision of that only. You can read, they have given that only. Check kar lo. Impairment is 6.5 million. They have given that only. For compensation of breach of contract of 0.55 million, same principle applies as applied to redundancy cost. Means this is due to onerous contract, you can write down. Correct. Point number 4, no charge is recognized because this is future operating loss. Only I need to explain point number 5. The net cost of fulfilling the court. So can I say they have taken, achha, these two they have created. So point number 1 to point number 4 you have understood. And you can also write also based on India's 37 and India's 36. India's 36 means impairment loss. Correct. Now, before I take that lease wala point, I need to explain India's 116. India's 116, that is lease. We have not done India's 116. Lease. Before India's 116, there was India's 17, which is now deleted because it has been replaced by what? India's 116. Understood? Now, India's 17 was exactly the replica of what? AS 19. Now, you know AS 19. Now, AS 19, what they used to say? There are two party, lessee and lessor. And for accounting treatment, we need to classify as operating lease and finance lease. In both books, this was AS 19, this was India's 17. Correct. Then India's 116 has done some changes. Changes is what? The lessee lessor will remain same. But for lessor, for accounting treatment, will classify as operating lease and finance lease. But for the books of lessee, there is no classification required. No classification. Understood? What they want to say is, suppose this mobile I have given on lease to you, whether for 1 month or 5 years. 1 month means you may think operating lease. 5 years you may think finance lease. You may think, there are many indicators in AS 19. Means if I am saying long term, it may be finance lease. Short term, it may be operating lease. I just want to say. But if I have given for 1 month or 5 years, that is not a case. But can I say, for your point of view, from lessee point of view, you have a right to control this asset for that specified period or not. Means you have a right on this asset either for 1 month or 1 year or 2 year or 5 year or 10 year or till the economic life of the asset. So if you have right to control this asset, it becomes your asset for that particular period. And if it is your asset, you should recognize that asset for that particular period. And therefore, there is no concept of operating lease or finance lease now in the books of lessee. So they say that this lessee will recognize a ROU asset, right of use asset, commonly known as ROU asset, right of use asset, for that particular lease period. It can be 1 month, it can be 1 year, it can be 5 years. And a lease liability and corresponding lease liability. Understood? Have you understood this point? Means in the books of lessee, now there is no concept of operating lease and finance lease. And whatever is the lease, they need to recognize ROU asset. Don't think much now. Only this much. Why? What will do in the lesser books? Don't think much. This much you understood? Detailed discussion will do where? In Ind AS 116 na? Correct? Now, if you read the question, what is given? अभी तो Ind AS 116 की Ind AS 17. 116. What they have given? The division operate from a lease or premises. The lease is a non-cancelable operating lease. This is lessee or lesser? This particular company is lessee or lesser? Lessee. In the books of lessee, how operating lease? Question is not correct. Question is not correct. Understood? Now just try to understand. This was effective from 1/4/2019. I'm just giving the background of this particular question. 1/4/2019. There was one more question similar to that. Means when Ind AS 17 was there, because when the initially we used to teach Ind AS 17, then from 1/4/19 we started teaching Ind AS 116. Correct? Now there was one more question similar to that. I'm just giving the background of this question. This question. This question was old question. Same point was given here about this. Understood? Same question, same point was given, and they have given answer based on Ind AS 17. So what I used to do in the class, I used to correct the answer. I used to say, if I now Ind AS 116 there, so this part is actually not correct. So they will now not ask this particular point in this particular question. Because can I say already they have created lease liability? The lessee has already created lease liability. Any provision required? No provision required. Are you able to understand? The question of provision will not apply now in case of operating lease, because there was no liability created. Now it become an onerous contract. If it become onerous contract, then Ind AS 37 will be applicable. So at that point of time, we used to teach it is an onerous contract. But now the already lease liability is there. So what I used to say, delete this para. Now they will never ask this particular question. Means they will ask this question, but they will modify it. But what happened? Recently, this question have been introduced. Matha kharab. Matlab, what to say, what not to say, I can't understand. Means how to teach now. This question was recently given in November 2023. And they have modified the question, but in a better way and better information about operating lease. What this means? Same question can be asked. Can you write down it is wrong question in exam hall? Now the question is that, can you rectify the solution? That also no, sir. Because who is going to inform them? So now there is a problem. So what I will say, abhi to I will explain from the point of your current answer. I don't have any options now. But from my point of view, this is 100% wrong question, which need a rectification. And that might be a reason that this question is not yet asked till now. This might be a reason. This question is not yet asked till now. Because they have also understood, but how to rectify they are not able to understand. Or it is quite possible same question may be repeated. Correct? Understood? So just write down here. As per Ind AS 116, there is no concept of operating lease and finance lease. As per Ind AS 116, there is no concept of operating lease and finance lease in the books of lessee. Therefore, therefore, this particular part is not correct. However, if the same question is asked in exam, same question is asked in exam, answer as per ICI solution. Answer as per ICI solution. Understood? Got this point? And if they change the question, I will inform you. Don't worry. I will inform you before exam. That is my job. Or now you have written, so you will ask me only before exam what to do. I will answer that time. Have you understood my point of view? This question should be rectified. But because they have given the same question recently, now I have a fear. Now I have a fear. The same question can be asked. Correct? Yes, sir. Now, chalo, bhul jao. Whatever I have said. Now, if there is an operating lease, so can I say this become an onerous contract? Why it become an onerous contract? Because if you remember AS 19, in case of operating lease, they don't recognize, lessee don't recognize any asset, they don't recognize any liability. And now, if they have decided to close down the business and they cannot cancel the contract, they need to pay what? This payment. And there is no termination clause also. If there is no termination clause, so this contract become onerous, and therefore we should think about provision. Provision will be based on present value of future payment minus present value of future received due to subletting. If they can sublet, so there will be some recovery. There will be some recovery. Understood? Correct? Have you understood? So you are creating provision on 31st March. 31st March, which date? 31st March 2002. 31st March 2002. Correct? Understood. And what is the amount payable? Batao. What is the amount payable? 1.5 million. So can you see, you can find out present value of 1.5 million for how many years? What is the remaining tenure? Remaining tenure is 5 years. Correct. Now it is not given na? 5 years. It is given. Unexpired with 5 years. So 1.5 multiplied by, can you say 4.32? 4.32. How much is coming? 6.48 million. 6.48 million. So this become present value of future lease payment minus present value of recovery. Minus present value of recovery. Are you able to understand? The present value of recovery will be how much? Now they will sublet from which date? 1st October 2002. Means first year only 6 months. First year only 6 months. Correct. So 6 months was how much? 3 lakh. 3 lakh. Are you able to understand? Correct. So can you say this 3 lakh will apply what rate? 3 lakh means million na. It is 0.3 million. Multiplied by what? Multiplied by what? 1. It is received, can I say, at the end of the first year? Only for first 6 months. We multiply what? 0.95. receive at the end na of the first year, at the end of the first year, but only for 6 months, correct? But you are calculating at the beginning of the first year. Understood? Then balance 5 lakh you receive for second year, third year, fourth year. With this 5 lakh you receive na for the entire year, for second, third, fourth and fifth. So this will be 5 million, 0.5 na. It is 0.5 million multiplied by what? 4.32 minus what? 0.95. बोलो yes or no? बोल दो yes or no. तो 4.32 minus 0.95 how much? 0. 0. Not 3.37. How much it is coming total? Total 1.97. This you deduct from where? Minus 1.97 is equal to how much? 4.51. So this much provision should be created or not? This much provision should be created. Let's see what is the answer. 4.51. Jadu. But bakwas. Totally bakwas. Totally bakwas. Understood? No, 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 no. देखो, I am assuming that you know what? Present value factor everything. Means you know FM. So therefore I am not explaining this part. That assumption I need to take na. Because I am not here to teach you discounting. You want explanation why? Because this is what? 5 year. And 5 million, whatever, 5 lakh you are paying. This is 5 lakh here, 5 lakh here, 5 lakh here, 5 lakh here. So this is not at all relevant now. Or you take individually better. Better calculate individually if you are confused. First year it is 0.3, second year 0.5, third year 0.5, fourth year 0.5, fifth year 0.5. So for fifth year you will take what? 4.32 minus what? 0.95. 4.32 minus what? 3.54 for fifth year. For fifth year. So you can do in that way also, your choice. Understood now? Correct? Have you understood? So I'm assuming that you have understood this particular part. Okay, sir. Good question, but question is good. Concept means bakwas concept, but question is good. Am I right or not? From exam point, if these questions come, if it is correct, then most of the student will not be able to answer it. Therefore, I have given, I don't know whether they will modify, they will not modify, what is their intention. Correct now. So I have already given a note. As per 116, this para is not correct. But if question asks, same question asks, give ICA solution. And don't write anything. Don't write anything. You don't know anything. You don't know. You should leave board of studies. Chalega? Okay, sir. Okay, sir. Have you understood? Correct. So this question and same question, whatever question I have said now, one more question is there that you just write down. These are of same quality. What was that question number? This question. Here also this point number B. Write down. Same thing. As per India's 116. Question number 17. Question 17 also write down. Similar question. Other part is same to same. Just write down. Point number B. This para is not correct as per India's 116. But have you understood my emotions? One day I was taking my revision class. So some student came, correct now, who have done classes from other faculty. So I have said same thing in my revision class. So they were saying ki actually this type of information is not given to them. Because I can also ignore this. If I'll ignore this, you'll be able to understand. But you are not conceptually correct now that time. Because in exam, you'll apply concept. That time you have done India's 116. You have done India's 116. Let's see operating list, you'll die. In exam, right now you'll be able to understand. But in exam, India's 116 you have done. Now to will say, okay, operating list, operating list will never come in the books of. Let's see. That time you'll not be confused. How this is possible? That time you'll ignore this. Therefore, I have written by same to same questions coming. Give answer as per what? IC solution. Because whenever wrong question, if you are attempting it, then only you are getting marks. This is a rule. If you are not attempting, you are not getting any marks. Chalega? This also done. So one question was sufficient to understand this point number 13. Now the chapter over. Scope में आओ. Scope means what? What is not applicable in this chapter? Means what are the liability which are not covered in this particular chapter? So scope in days 37 is not applicable to executory contract unless what onerous. Actually, scope means the first point of any index. That index. Can I teach scope at the beginning? You don't know executory contract, you don't know onerous contract, I can't teach. Therefore, I am teaching at the end. Okay? It is not applicable to executory contract unless onerous. Now you have understood. It is not applicable to financial instrument. Financial instrument means financial asset. Already I have said this point also. Financial asset means what? Debtor, investment. That is to decline the value of asset. Decline the value of asset is not covered in this particular chapter. Already I have explained. Is not applicable to income tax. Why? Because for income tax we have a specific Ind AS 12 which was nothing but AS 22. Okay. It is not applicable to employee benefit because for employee benefit we have Ind AS 19 nothing but AS 15. Okay. Not applicable to insurance contract because insurance contract we have a specific Ind AS 11104 which will be now replaced by Ind AS 117. Correct now. So Ind AS 11104 is not in syllabus. Not in syllabus. And we don't know about Ind AS 117 right now. Correct. And any contingent consideration arising in case of business combination. So any contingent consideration in case of business combination will be covered under Ind AS 103. Detailed discussion will be done about this point under Ind AS 103. Disclosure for each class of provision. What we should disclose? A brief description of the nature of obligation. An indication of uncertainties about the amount or timing of those outflows. So if there is any uncertainties, that is to disclose. The amount of any expected reimbursement if that disclosure required. If you have not recognized the reimbursement asset, stating the amount of any asset that has been recognized for the expected reimbursement and how much asset you have recognized, that also you should disclose. For each class of contingent liability, a brief description of the nature of contingent liability. Wherever practicable, an estimate means if you can measure it, then what is the amount of such contingent liability, an estimate of its financial effect, an indication of the uncertainties related to the amount of timing of any amount or timing of any outflow. If there is any uncertainties, the possibility of any reimbursement, if there is any possibility, that also you should disclose. For each class of contingent asset, a brief description of the nature of contingent asset and an estimate of financial effect where practical. Sir, estimate? But say Ind AS 37 has not discussed anything about estimation of contingent asset. Silent. Silent means question will not be asked. But practically, if you want to estimate, apply the same rule. Whatever you have applied for the measurement of what? Provision, same rule will be applicable. But how to estimate contingent asset, that has not been given under Ind AS 37. Understood? Yes, sir. Then this point, where any of the above information required is not disclosed because it is not practicable to do so. Means if the amount cannot be estimated, facts should be disclosed that amount cannot be estimated. Then the facts shall be stated. Difference between Ind AS 37 and AS 29. Constructive obligation. AS 29 was silent and Ind AS 37 did. Now when I say silent, silent does not mean it is not applicable. AS 29 was silent regarding constructive obligation, It depends upon entity whether they want to apply AS29 on constructive obligation or not. It is silent. It is silent means they were totally silent about constructive obligation. They have not defined it. Means it can be applied because obligation will include constructive obligation also. So that is dependent upon entity whether they want to apply AS29 on constructive obligation or not. But I know no entity apply AS29 on constructive. Discount not allowed. AS29 not allowed. However, there is only one exception, that DRSL. So AS29 says that if there is some decommissioning and restoration and similar liability, then discounting is permitted, and that will discuss under what? In AS 16. I don't refer in AS 16. This exception point will discuss there. However, can you say our Ind AS 37 says allowed if the time value of money is material. Contingent asset AS29 says disclose in the report of approving authority. However, Ind AS 37 says disclose in the notes to account, means in our financial statement. Onerous contract, we have done one point that if there is some dedicated asset, first apply impairment loss as per Ind AS 36. For balance loss, apply Ind AS 37. This para was totally missing under AS 29. It requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as per Ind AS 37. Totally silent in AS 29. Chapter over. Chapter over means now all the other questions you can do by your own. Now what I will do? I will read. Only you can only read, but I will give you some question that you do by your own. Question 21, 21, 22, two by your own. And if any doubt, you can ask me. Okay. 26, 27, 30. This to I will only do. I will only do. Good question. This much you have written. 16, and 19. Means whenever I am giving some question, suppose you don't have time, this much do you do. This much do you do. Suppose you don't have time, this much you do. Because I am giving some good quality of question. But one question that also let us take, because in that doubt may come. If you do not understand the information given in the question, and that is super expected. Super expected till now not asking exam. What was the question number? 30 na? Super expected, write down super expected. XYZ Limited offer a 6-month warranty on a small and medium sized equipment which can be put to use by the customer with no installation support. Warranty has been given. The warranty comes with the equipment and the customer cannot purchase it separately. The warranty comes with the equipment and the customer cannot purchase separately. Whenever a question with comes sales with warranty, so we'll also discuss warranty in Ind AS 115. Ind AS 115 is revenue recognition. Correct. So just write down. Whenever warranty question na, refer Ind AS 115. A better understanding will come. Means when this point is given na, ki the warranty comes with the equipment and the customer cannot purchase separately, then only Ind AS 37 is applicable. This point is given where? In Ind AS 115. Means if it can be purchased separately, then Ind AS 37 is not applicable. The better understanding will come where? Ind AS 115. Therefore, when you are reading this question at a time of revision, that time to Ind AS 115 completed. So read first Ind AS 115, then come to this question, then better understanding will come for this particular question. I mean, right now better understanding will not come. Now we are answering only to the extent of Ind AS 37. And this question is related to Ind AS 37 because they have given this point. Which point? It cannot be separately purchased. The warranty comes with the equipment and the customer cannot purchase separately. The equipment is typically sold at a gross margin of 40%. It is sold at a gross margin of 40%. XYZ Limited has made a provision of 30,000 during the year ended 31st March 2022. Already how much provision is created? 30,000. 30,000 now. Correct. Which is approximately 1% of gross margin on sale of this equipment, and this 30,000 is 1% of gross margin. 1% of gross margin. Correct. It means you can calculate gross margin, and if you can calculate gross margin, you can calculate sales. You can calculate sales. Based on the past experience, it is expected that 1% of equipment sold have been returned as faulty within the warranty period. Now what they are saying, as per the past experience, 1% of goods sold is returned. Correct? As per the past experience. Faulty equipment returned to XYZ Limited during a warranty period are scrapped and the sale value is fully refunded to customer. Means can I say, as per the past experience, if one, how much? As per the past experience, if 1% of equipment sold is returned and full amount is refunded and that goods are scrapped, so this should be the amount of provision. So what they have asked, this should be the amount of provision. How much they have created? 30,000. So what will be the extra provision? What will be the amount of extra provision? This is the question. Question understood? Nara. Calculation required. Assuming that sales occurred evenly during the year, how should XYZ Limited evaluate whether any additional warranty provision is required on equipment sold in the past as 31st March 2002? Had the warranty period been 2 years instead of 6 months, what additional criteria would XYZ Limited need to consider? First is 6 months. Let us answer as per 6 months. So 30,000 is the provision for the last 6 months. Correct now. Means just try to understand what they want to say. Suppose this is the year. Any goods is sold in the this first 6 months. Provision, yeah, warranty period expired. Warranty period expired, therefore no provision required. But any goods sold during the last 6 months, warranty period is not expired. Therefore provision required. Therefore provision required. So 30,000 already they created. This is 1% of what? Gross margin. So divided by 1%. How much it is coming? 30 lakh. So 30 lakh is what? 30 lakh is gross margin. Gross margin. Correct. So what is the sales? Divide by 40%. What is the sales? 75 lakh. So 75 lakh is the sale of how many months? 6 months. It is sale of 6 months. Understood? So what is the additional warranty is required? That is the question. Now 75 lakh is the 6 month. Correct. And what they are saying, ki out of that 1% is expected to be returned. 1% is that is only given. You can see for 30 lakh was a gross margin. Correct. Yes or no? This was 6 months na. Hmm? Acha. They have created 1% of gross margin on sale of this equipment. Means entire year they have created provision. They have created provision for the entire year. It means the 75 lakh is the annual sale. 75 lakh is the annual sale. So what is the 6 month sale? 6 month sale will be half. Half is what? 37 lakh 50,000. 37 lakh 50,000 will be the 6 month sale. And out of that 6 month sale, 1% will be returned. 1% is how much coming? 37,500. What is the additional provision required? 7,500 is the additional provision required. Simple. But what happens this type of question if you have not done before exam now? So quite possible you are not able to understand some information and you have done some mistake. One mistake, 0 marks. Correct. Now they have asked if it is 2 year, if the warranty is for 2 year, what they have said? If the warranty has been given for 2 year, then what need to be done? So can I say in that case, can I say you need to take the entire sales of that year? So entire sale is 75 lakh. So 75 lakh will come. 1% is our 75,000. Additional provision will be how much? 75,000 minus 30,000, that is 45,000. I think you have done for the entire year. Said 45,000 at that time. Okay. So 45,000 become the extra provision for point number 2. But can I say if it is 2 year, then time value of money may be material. Therefore, discounting is also required. So that is also given the solution what they have given. Since the outstanding period of warranty is 6 months, no discounting is required. However, if a longer warranty period is to be given, entity will have to take into the account the effect of time value of money. The amount of provision shall be the present value of the expenditure expected required to settle the warranty obligation. I have also said practically if the amount is payable within 1 year, it is time value of money is not material. But if the amount is payable more than 1 year, means after 1 year, then what? Time value money is material. That is means they have applied that practical understanding wala point. However, discount rate is not given. So they have just given that information in the second part because the warranty period will be expired after 1 year. Therefore, provision will be calculated at present value by using the discounting rate. By using the discount rate. Chalega. Good question. Good question. Always give. Right on MRQ. MRQ means what? Must revise question before exam. Done. Chapter is over from my point of view. Chapter is over. Chapter is over from my point of view, not from your point of view. You need to read all the questions. Once you have read all the questions, all the doubt is over, then the chapter is completed. And if you read all the questions during the class only, it will be always good. Okay. We'll take break. After break, we'll start India's 10. Now, can we start once again, everyone? Yes, sir. Okay. Now, let us start a new chapter, that is Ind AS 10, event occurring after reporting date. Very simple, and I will say just equal to AS4 with very small changes. But if you know AS4, you know what Ind AS 10. Nothing to teach much because already you know AS4. Now, what do you mean by event occurring after reporting date? When I am saying event after reporting date, the reporting date means balance sheet date. So, if this is the balance sheet date, correct? So, this will be our current reporting period. This is our reporting period. Reporting period means start from 1st April to 31st March. Correct? Understood. So, when I say event occurring after reporting date, so this will be the event occurring after balance sheet date. Bolo yes or no? But not all. The event occurring after reporting date will be the event up to the date of what? Up to the date of approval of financial statement. Means of course this financial statement of this particular year will be approved at some point of time. So we need to find out the approval date. Approval date. Now normally what happens, if you see the practical scenario, if I say practical scenario, what actually happened? I'm just giving some practical understanding. If this is the 31st March. It is on 31st March, trial balance will be first prepared. From the trial balance, a draft financial statement will be prepared. Draft financial statement. When I say draft, means it is not yet audited. Not yet audited. Then one auditor will be appointed. Auditor will be appointed. It is already appointed. Means he will come for what? Audit. He will give some time for audit. Audit will be completed. He will generate their audit report. And he will also ask the management to do some adjustment. Whatever information came in the eyes of what? That particular auditor. So he may ask the management to change, do some adjustment. Means there may be some error. There may be some wrong accounting treatment. Correct now. My question to you, whether auditor can change. Whether auditor can change the accounting treatment already done. No. However, practically we only change. We means we being a CA become an auditor. But as per the rule, they can't change it. They can only inform the management for the particular change. For the particular change. Means they do not have a right to change the financial statement. Understood? They will just give their opinion if these are the error found. This error require rectification and this information will be given to what? To the management. So guys, after audit is completed, entire information will be given to the management. Management means board of director. Management after going through the entire information, the entire queries which have been raised by the auditor, they will do the adjustment. They will make all the adjustment, or they may do not adjust. They may think not to adjust because as per their opinion, whatever they have done, that might be correct. It is quite possible. Normally, they will do the adjustment. I mean, normally auditor will only do the change. Correct. Once the management has done the changes and the financial statement is fully prepared, then they will sign it. Means they will call a board of directors meeting. So after some point of time, a board of directors meeting will be held. And in this meeting, they will sign what? The financial statement. They will sign the financial statement. And once the financial statement is signed, that will be presented to the shareholders in annual general meeting. So after some point of time, AGM will be held. So suppose AGM is held at this point of time and this financial statement will be given to the shareholders, means presented to shareholders for their approval. For their approval. Means at this point of time, can you say it is approved by whom? It is approved by shareholders. Approved by shareholders. Means when they sign, it is approved by whom? It is approved by board of directors. Board of directors. Now the question arises, the event occurring after balance sheet date is the event which occur after balance sheet date and before approval of financial statement. So which date is relevant? This date is relevant or the approval of shareholders is the relevant? So one clarification has been given कि approval of shareholders is not at all relevant. Only the approval of board of directors is relevant. Means can say this become what? Date of approval from this chapter point of view. So we know this point. Why you are saying? Because I am teaching, so I have already said, I have assumed that you don't know. Already I have assumed that. I will do my job. I will inform you everything. Correct? So can you see, you all know that date of approval is the date when the board of directors will sign the financial statement. That become the date of approval. So from this chapter point of view, can I say this become the event occurring after balance sheet date? Or can I say as a student one doubt will come. So it is quite possible that after this date also some information might come which may be relevant for what? Current financial year. Until now shareholders has not approved it. So why that event is not considered? One doubt may come. One doubt may come. Have you understood? If shareholder has not approved it now, means you are saying okay, any information, yeah, any event which occur after this may be adjusted, because you all know about adjusting event and non-adjusting event. But any information may come after the approval of board of directors, before approval of shareholders, which may be relevant for current financial year. It might be an error also. It might be an error, even though we have audit, but that is not an absolute audit, because we only are human beings. So even after audit, there may be some error left. Quite possible now. And therefore, in our audit report, we always give an opinion that whatever financial statement is given, that is state true and fair view. That is an opinion. We never give an absolute statement that it is true. We give our opinion. So after audit also there may be some error, quite possible, and that may be identified after approval of financial statement by board of directors, but before approval of shareholders. So one doubt will come. So why this information is not considered? Why this is not considered? Why this is not considered? That is a point. Are you able to understand my point? My point, have you understood? Of course, that doubt may come now. Understood? What is the reason for that? Once the board of directors has signed it, then we cannot change the financial statement. That is only the rule, because that is already submitted to ROC. That is already submitted to income tax department. So after submission to the government department, it cannot be changed. Cannot be changed. Understood? Have you understood? So once the board of directors signed it, then there cannot be any there cannot be any changes. And therefore, can I say the draft financial statement, once it is approved by what? Board of director, cannot be amended, means it can be amended only before what? Board of director approval. And therefore this event which is relevant for this financial year, correct now, any event which occur after 31st March but before approval of financial statement by board of director may require, yeah, may be useful for the current financial year. Can I say for that some adjustment may be done? Some adjustment may be done. Understood? And therefore this chapter is relevant. It is a practically most important chapter, because entire financial statement is based on this event only. And if you remember your class 11th and class 12 accounts class, so trial balance used to be given with adjustment only. This adjustment was nothing but adjusting event. They were nothing but adjusting event. Now, miss, you have already done all the adjustment. Now we are just teaching you why that adjustment. Why that adjustment. Understood whatever I am saying? Have you understood? But one doubt will come. Doubt is what? First doubt to is clear कि why board of directors date is relevant. Correct. One doubt will come. Doubt is what? Sunna. This is 31st March. You can give answer by your own. I am just asking this doubt. If you are responding and if you are giving correct answer, means you have understanding. You have already understood all my emotions. This is the financial year, and we know one concept, that is periodicity concept. What our periodicity concept says, कि any transaction which is related to this year should be accounted in this year. That is only periodicity concept. Means any transaction or event which is after 31st March should not be accounted during this financial year. Yes or no? That only we have done. Any transaction event which occur after what? 31st March will be recorded after 31st March. And we know one more point, chronological order. In journal entry, also we have applied always chronological order. We do recording as per the date of transaction. As per date of transaction. Now this chapter what they say, कि any event which occur after balance sheet date but before approval of financial statement can be adjusted. And can I say journal entry can be done on 31st March, even though even occur after 31st March. So isn't it is a violation of periodicity concept? Why no? Event condition. It means there was a condition. Very good. Condition means what? Contingencies. I started with contingency. Condition is already existing on what? 31st March. Means there were some contingencies existing on 31st March, and for that some information has been received. Some information has been received. And therefore, even though even occur after balance sheet date, but is related to the condition existing on the balance sheet date, and therefore that should be considered. That should be considered. Perfect. Perfect. Now, one more point, one more clarification. Sometime what happened? Suppose this is the 31st March, 31st March, and this is the board of directors meeting held. But sometime what happened? A special power is given to some of the officer or owner of the company. They can reopen the books of account if they found that there is some fraud going on. Understood? So even though it is already signed by whom? Board of directors. So they may have a power to reopen the books of account. So some officer, some owner may have that power, and that power may be given in the articles of association. Correct. So suppose board of director has signed here, and it was the books of account were reopened. Reopened means it will be further investigated. Correct now. Reopened. Once again, financial statement will be prepared as per what? After reopening of books of account. And once again, can I say board of directors meeting will be held, and once again it will be signed or not. In this case, date of approval for this chapter will be the first date or second date? No, bola second date. In this, the date of approval will be this, and this will be all what even occurring after balance sheet date, because can I say after reopening of books of account you have done adjustment. If you have done adjustment, it means what? Adjusting event. Adjusting means what? AS4 in AS 10. As per AS4 and Ind AS 10 only you can do adjustment now. Bolna yes or no? Then what is the need of reopening? If you are seeing only the first date, it means you cannot adjust. Then why you are reopening the books of account? Are you able to understand why that special power has been given? Because you can adjust the financial statement which is already prepared, already finalized, already approved. And therefore, in this scenario, the date will be board of this date when it is again approved by the board of directors. Correct. One same question have been given ICS study material. I like this question personally, but till now not asked in exam. Till now not asked in exam this particular question. Where is that question? I think this. The board of directors of ABC Limited approved the financial statement for the reporting period 2011-12 for issue on June 15, 2012. Correct. The management of ABC Limited discovered a major fraud and decided to reopen the books of account. Correct. The financial statement was subsequently approved by the board of directors on June 30. What is the date of approval for issue as per India's 10 in the given case? June 30. But now you know. If you don't know, difficult question in exam. Super difficult, and this type of question now can be asked in MCQ. Because before MCQs, now there was no scope of this type of question. And therefore, till now that this type of question has not been asked in exam. But with MCQ, now there is a scope. If for 2 marks it become perfect. And most of the question, the first option will be what? 15 June. मजा वहीं आएगा. Last option will what? 30th June. Understood what I am saying? Good question or not? The good question. So just write down. Good question. Identify it. Chalega. But now I hope you can understand. You can do this question because you have understood. Okay, sir. This you have understood. So let us come to the meaning. Even after reporting date are those events which can be favorable or unfavorable. Of course, that event can be favorable or unfavorable. And which occur between reporting date and the date when the financial statement are approved for the issue. When clarification has been given that financial statement are approved for the issue, it means when the board of directors approved that date, that clarification has been given. Correct. And for the clarification, 3 point has been given under India's 10. 3 point has been given under India's 10. They have given that clarification. First, if financial statement are approved by shareholders, after financial statement are approved by board of directors, financial statement are approved for issue on the date of approval by board of directors. Understood? This already happened. Sometime what happened? Second clarification. Sometime what happened? This type of case study might be difficult. Suppose you have taken loan from bank 500 crore. In that case, the bank will appoint one officer for the supervision. Any fraud is going or not, whether they will be able to repay the principal amount and interest amount on time or not. And that officer will become a part of supervisory board as a non-executive director. Correct? Means once now as per the banking condition, once it is approved by board of directors, it again require approval from supervisory board. Now case studies has been given in that way. It is approved by board of directors. Now it also require approval from supervisory board. The 2 date will be given. Which date will be relevant for this chapter? Board of director approval. Clarification has been given. Supervisory board approval is only a formality from banking point of view. From banking point of view. Understood? Correct? So in this case, clarification has been given if financial statement are to be issued to the supervisory board of non-executive director for approval after management approved financial statement. In that case, also financial statement are approved for issue when management approved financial statement. One thing you have understood. Once the financial statement is approved by board of director, then we cannot change the financial statement. Means we cannot change the profit. We cannot change the profit. This too you have understood. Now, one more case. Just try to this all are very simple case study in classroom. But this case study will become difficult in exam hall because that time you are alone and you are thinking the doubt may come. Correct? Understood? So let me give one more example. Suppose entity is preparing quarterly financial statement. Quarterly financial statement, we call it interim financial report. It is covered under India's 34 coming soon in your life. Coming soon in life. How to prepare that we'll discuss under India's 34. So this become Q1, this become Q2, this become Q3, this become Q4. Understood? And can this also require approval? Again, this will be approved at this point of time. This will be approved at this point of time. This will be approved at this point of time. Correct? and this will be approved at this point of time. Are you getting? So right now I am not discussing about interim financial report. That will be discussed under Ind AS 34. Can I say once the all the quarter financial statement approved means you know the profit. You know the profit. Profit is known. Correct. Can I say annual financial statement whether it requires separate approval? Yes. For annual financial statement, a separate board of directors meeting will be held. And suppose at this point of time, board of directors meeting is held for the approval of what? Approval of financial statement, annual financial statement, and they have approved at this point of time. They have approved at this point of time. Understood this point? Correct. Now the question is that, correct, if profit is known, means at this point of time, profit was already known for Q1, Q2, Q3, Q4. Now any event may occur after this date, whether that will be considered. 100% correct. Annual financial statement may be different from what? Quarterly financial statement. But just try to understand. I have not given many ifs and buts. In exam, they will design the case study in such a way that you might be confused if you don't know this point. And therefore, explanation required. Till now, no question of this nature have been asked in exam, but can be asked. The last point. If financial statement are approved by the board of directors after public announcement of profit, after announcement of profit, possible means all that quarterly information already published. If quarterly information published means profit is known to everyone, or other financial information, in that case also financial statement approved for the issue on the date of approval by board of directors. Correct. This is only a clarification. Now coming to the chapter is very easy. Any event which occur after balance date but before approval of financial statement are of two types. One is adjusting event, one is non-adjusting event. You all know adjusting event. Adjusting event are those events which provide evidence of the condition existing on the balance sheet date. Correct? Which provide evidence of the condition existing on the balance sheet date. If you read AS4, AS4 says which provide further evidence. But in AS 10 says which provide evidence. Whether meaning is same or different? Different. Meaning is different. AS4 says which provide further evidence. Ind AS 10 says which provide evidence. Okay? So अभी तो I am teaching Ind AS 10. Difference is not in our syllabus. But this word will change your most of the answer. Correct? So be careful when I am asking example. Which provide evidence of the condition existing on the reporting date. Which provide evidence of the condition existing on the balance sheet date. Reporting date. And it will be adjusted to the financial statement. Adjusted to the financial statement means you will pass one adjustment entry. When you will pass adjustment entry, it will affect the asset, liability or income and expense. Means any journal entry will affect income and expense and assets or liability. And asset liability. Correct? So it will affect income or expense and asset or liability. Normally it will not affect equity. Equity means equity share capital because there may be some error in that also. Okay. Correct. But normally the question will be for this only. Therefore I am writing asset or liability. Okay. So what are non-adjusting event? Non-adjusting event are those events which relate to any condition arising after reporting date. We relate to the condition, but that condition arises after reporting date. Right? So which relate to the condition arising after reporting date. For that no adjustment required. No adjustment required. No adjustment means no journal entry required in current financial statement. Means that will be recorded, but in the next financial year. No adjustment required where? In the current financial year means current reporting period. Of course, that will be generalized in the next financial year. But can I say non-adjusting even what Ind AS 10 says that if the amount is material, it requires disclosure. It requires disclosure. So disclosure of such event is required in the financial statement that is notes to account if the amount is material. Of course, if the amount is immaterial, then we ignore it. चलेगा? Done. Second is a no over, nothing to teach, and you know adjusting, non-adjusting. But then also I will take some questions to understand whether you know this chapter or not. Correct? चलेगा? तो whatever example I am taking CA inter example only. First, I will take CA inter example and धीरे धीरे I will increase the level. Whatever you are answering, you need to answer based on CA final classes. चलेगा? Yes, sir. Example number 1. 31st March, date of approval. There was debtor. Yes, every teacher start with debtor only. And sometimes we think that this chapter is for debtor only. You have done some more example ki only debtor? Huh? Only debtor? Mostly. I know. Many teachers teach only debtor because ICA is only asking debtor. But it is for any transaction, any event which occur after balancing date. Now this debtor, amount receivable was 10 lakh. And after reporting date, this in the premises that this debtor, in the factory of this debtor, fire occurred. Fire occurred in the factory of debtor, and this debtor become insolvent, died, whatever. Died बोलना अच्छा नहीं लगता. Insolvent. He become insolvent, and no amount is recoverable. No amount recoverable. So the adjusting, non-adjusting. Non-adjusting. Adjusting, non-adjusting. How many are saying adjusting? How many are saying non-adjusting? So it means doubt to have. Means if some of you are saying non-adjusting, some of you are saying adjusting, means doubt is there. I was not expecting doubt, believe me. I was not expecting doubt. In this question, I was not expecting doubt. चलो ठीक है, doubt आ गया. It is non-adjusting. It is not adjusting. Why doubt came, because you have not understood AS4 conceptually. You have not understood AS4 conceptually. What is the objective of AS4? First, let us understand. What is the objective? What they are saying, that objective I will explain with the second example. When I will give second example, it will give more clearance. Don't think much. My answer is not correct. Now, I will give only answer. Answer will come when I will convince your doubt will clear with the second example. Okay. This is non-adjusting. I will explain why after second example. You are writing, not writing? You are writing, not writing? Right. Even though you don't want to write, write. 31st March. Date of approval. Now there was one debtor, but he was nalayak, means doubtful debtor. Why he was a doubtful debtor? Because to him a credit period of 2 months was allowed, was given, and that 2 months has been expired. Means he was supposed to pay the amount in 2 months, and that 2 months has been expired, and after expiry he has not paid the amount. So on 31st March he become doubtful now whether he will pay or he will not pay. Doubt is there or not? Doubtful does not mean he is a bad debtor. I mean, right now doubt comes. Alright? Understood? Suppose if I have taken one test right now and you have scored 0, one doubt will come. whether he will pass or he will not pass. Doubt will come. It does not mean he is a bad student. He might not have prepared right now. But when doubt will come, he might be a doubtful student. Doubt is there. So whenever is doubt, so can I say we'll create some allowance for bad and doubtful debt? Correct. As per respective Indias means Indias 109 coming soon in your life. Correct. Means can I say it will be impaired now? So on 31st March, you have applied other Indias. All other Indias is already applied. Correct now? So it means already it is impaired. So doubtful debtor, suppose the amount was 10 lakh and you have already created less allowance for doubtful debtor. And as per the best estimate, whatever you have on this date, it is your opinion that out of 10 lakh, 2 lakh might not be recovered. How this is calculated, don't ask me right now. This is the best estimate, whatever is given in the question. This is already done in the draft financial statement. And 8 lakh is what? Net amount. Have you understood? Now what happened? Something happened. Now after 31st March, he was declared insolvent, or he died, or he went to Pakistan. Now he will not come back now. He is not Sunny Deol. Understood? Means some information came to you, now nothing will be recovered. Correct. Now no amount is recoverable. Understood? Similar question but different circumstances. Here he was not a doubtful debtor. I have written only debtor. He was a good debtor only. Correct now? He was a good debtor. If nothing has been given to you, it means he is a good debtor. And after 31st March, something happened in his life. So he was a good debtor. He is a doubtful debtor. But now it is an adjusting or non-adjusting. It is an adjusting event. I think thora you are understanding by your own. I think thora you are understanding by your own. Arey, haan. Because here this this event relate to the condition arising after balance sheet date. There was no condition on 31st March. But here this event relate to the condition existing on 31st March, on or before 31st March, on 31st March. Understood? Correct. Now what is the objective of AS? In AS 10, AS 4. See, whatever financial statement you are preparing, that is based on estimation. But can that estimation should be best estimate? I mean, right now you have created allowance for bad and doubtful at 2 lakh. That was the estimation on 31st March. And before approval of financial statement, you have understood that 2 lakh is actually an estimation as on 31st March. But now we know that nothing is recoverable. If nothing is recoverable, whether it is correct to inform to the user of financial statement that net amount is 8 lakh. You know the actual position. Before approval of financial statement, nothing is recoverable. It means whatever you have estimated, you know the actual information about that. And that actual information you know before approval of financial statement, change it and give reliable information to the user of financial statement. This is the objective of Ind AS 10. Whatever information you are providing, that should be the true and fair information to the user. So if before approval of financial statement you have understood nothing is recoverable, so your estimation should be 2 lakh or 10 lakh. 10 lakh. And therefore Ind AS 10 says adjust it and increase the amount of allowance. Means what adjustment entry you will do? I'll give you two adjustment entry. You say me which adjustment entry is correct. Are you able to understand? First adjustment entry. Adjustment entry. First, bad debt. Because 2 lakh allowance already you created, huh? Allowance was how much? 2 lakh. To debtor. This is the first adjustment entry. This can be one possible journal entry. This can be one. Second, allowance 8 lakh. This is second possible entry. This can be two adjustment entry. But which adjustment is correct? Second or first? Second adjustment entry? The first adjustment entry. What is wrong in first? Yes. Means just try to understand. On 31st March it was a doubtful debtor. He become bad debtor in which year? Next financial year. Means you will recognize bad debt means actual loss in next financial year only. I mean right now though you are only creating allowance for bad and doubtful debt means you are creating only an allowance with an estimated amount and that estimated amount is known to you now. Got this point? So only we are here to find out what estimation we have done. For that any reliable information is whether we have got some reliable information to make it best estimate. If yes, do that estimation. This is the objective of India's test. If you have understood this objective, now any question whatever I will ask, you will give me correct answer. Got this point? Have you understood that this is the correct journal entry? This is not the correct journal entry. Adjustment entry, sorry. Bad debt entry will be recorded in the next financial. Got this point? Yes, sir. Example number 2 also you have. Let us come to example number 3. Now whatever example I will give, it is quite possible that type of question you have not done in your CE. But apply your common sense if you have understood the objective. 1 second, debtor only. Gross amount was 10 lakh and he was a doubtful debtor. Therefore, you have created an allowance for bad and doubtful debt. And that amount is 8 lakh. But what happened before approval of financial statement? You receive 10 lakh from debtor. Quite possible. You receive 10 lakh from debtor. Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting only na. So what adjustment you will do? Reverse the allowance because now if you have recovered the entire amount before approval of finances, actually there is no loss. Means he was a good debtor only. Due to some reason he was not able to pay. And if you got that information before approval of financial statement, you should inform to the user of financial statement the entire amount is recoverable. If entire amount is recoverable, then don't make any allowance. So it means adjusting entry. This adjusting event. I'm not writing what adjustment is required. That you can do by your own. Reverse the allowance. Reverse the allowance. Received journal entry will be done in next financial year. So I am not saying that pass this journal entry यहाँ पर. You have received in the next financial year. The debtor will be decreased in the next financial year. Correct? Got this point? I think better understanding is coming. One more example. Example number 4. Example number 4. Let us come to some other asset now. Suppose there was one machinery and you have decided that you have a proposal to sell such machinery at rupees 10 lakh before 31st March. Yeah, on 31st March. The carrying amount of machinery might be 8 lakh. Understood? Now, before approval of financial statement, sale done. Yeah, sale completed. Sale completed. बताओ. Adjusting, non-adjusting? Huh? Non-adjusting. Very good. Excellent. Non-adjusting. Correct. However, yeah, but just write down one more point. It is a non-adjusting, understood, but whenever it is a proposal to sale now, so there is one more Ind AS 105. Ind AS 105 says that it may be classified as held for sale. If any PP is classified as held for sale, then Ind AS 105 will be attracted. But there are some conditions given for that classification. So till now we have not studied that part. So it is quite possible Ind AS 105 might be attracted. So I'm just writing refer what? Refer Ind AS 105. Refer Ind AS 105. And when I'll come to Ind AS 105, I'll take again this example. If suppose there is no Ind AS 105, it is a non-adjusting. Means if the condition given under Ind AS 105 is not satisfied, so it is not classified as held for sale, it is a non-adjusting. Understood? Correct. So just write on refer Ind AS 105. Why? Because when you will do revision, that time you have done Ind AS 105, so doubt will come, sir, why you have not taken Ind AS 105 into consideration. Therefore I have written. Chalega? Example number 5. This question, whatever I'm asking now, this question is one of the popular question of CA Inter. But from my point of view, the question is not as per AS4. In CA Inter, I teach as per AS4 only. Means whatever solution given by ICI, because I can't change the solution of ICI. But now that we can understand the emotions of this particular case. Selena, what was the question? If there was one machinery, or better, let us take land. From land, you will be able to understand. There was a land, and it was agreed to be sold. Sale agreement done. Sale agreement done. Before what? Reporting date. Agreement done. Correct. And before approval of financial statement, registration completed. Registration completed. Understood? This is a question. Popular question is CA Inter. Now, as per CA Inter, what we teach? Because registration completed before approval of financial statement, it is an adjusting event. I think you have also done the same thing in your CA Inter class and popular question. And I also teach this only. And I don't give any expert opinion in CA Inter. Because if I'll give, what will happen? You will be only confused. Because not required as per IC solution. But now to required na. Just try to understand. Sale done, agreement done, control transfer not. Control transferred. Now if you have read AS10 or Ind AS 16 will do, AS10 and Ind AS 16 say that any asset will be recognized when the control of that asset is transferred. So sale done, control transferred, registration not completed. Yes, then also it will be de-recognized. So can registration is only a mere formality? Means as per substance of a form, where the registration required for passing journal entry. This is the form document now. Legal registration is required for legal activities. So what our substance of a form says that even though registration not completed, sale journal entry need to be done because control has been transferred. So if the control has been transferred before approval of financial statement and if the once again sale agreement has been done before reporting date and registration has not been finalized before approval of financial statement, whether you will de-recognize or you will not recognize. Whether you de-recognize, you will not de-recognize. De-recognize means even though registration not completed, you will de-recognize. The question is not correct. Question is not correct now. Why you asking this question? Even though registration not completed, it will be an adjusting even or not? Adjusting what? It is a transaction of that financial year only. Understood? Have you understood what I am saying? Correct. If suppose the same question asked in exam, in CA final this type of question they have not asked, but suppose they have asked, what should be your answer? You can say if control transferred, recognize sale even if registration is not completed before what? Before approval of financial statement, because that is not required. If control transferred, but suppose the question says control not transferred, sale done but control not transferred, quite possible. Quite possible. Now, when control is transferred, when control is not transferred, that we'll discuss in detail in some other India. Chalega? हाँ. So the question has mentioned if control not transferred. अच्छा, recognize sale means de-recognize PP. Recognize sale means de-recognize PP. You can also write on de-recognize PP. Correct. Sale will not be recognized even if what? Even if registration is completed before what? Approval of financial statement. Understood? And this answer we have done as per Ind AS 16. Actually, it is a question of Ind AS 16. It's not a question of what? Ind AS 10 from my point. It is not a question of Ind AS 10. But I have just informed you so that you should know now correct explanation of that question. If question is silent, always assume what? If question is silent, always assume control has been transferred. So registration is only a formality, mere formality. As per what? Substance over, you know substance over form na? Substance over form means what? Ki legal document will not be considered for accounting treatment. The actual substance of that transaction will be considered for the accounting treatment. Actual happening need to be taken into consideration. Legal document is not at all relevant. This also you have understood. One more example. But the time is last example. ले लो. One example. So this example will create a lot of confusion. Example 6. Chalo, we'll do in the next class. Because it will create a lot of confusion. If I have more time, so better take in the next class. Okay. But up to this you have understood. 4 or 5 more example I will take. Then there are 2 special point, 3 special point. That chapter will be. In next class will start any other Indians. Okay. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.